Is the question.
We're going live. We're gonna do it.
We went live.
All right, producer. He just gave us a thumbs up. We're good to go live.
He did not. I didn't see a thumbs up at all.
Look.
Oh, there it is.
There it is. You know where else has a thumbs up? YouTube.
That's true.
You can turn it blue by smashing a like. Is it too early in the show to ask him to smash a like?
We just started. Give him a second to get here.
Right.
Hey, Maximilian, what's up with DPRO? Maximilian, we're gonna find out. How about that? Directly from the company themselves. We're gonna. DPRO is of course Draganfly, of course. We're gonna have the CEO Cameron Chell on this show in like an hour and 45 minutes at 1:15 Eastern time. So stay tuned for that. That's what's up with DPRO. We're talking to the CEO today. And is it MC or Mick?
MC, I feel like a silent assassin. I never write in here, but watch from the side.
So I believe the term for that is first time, long time, right?
You're a lurker.
You're the radio terminology would be, hey, long time listener, first time caller. In your case, you're a long time viewer, first time commenter.
Welcome to the comments.
It's
a lot of fun. Comment section usually gets pretty rowdy, but let's keep it civil today. For MC, it's her first day in the chat, so we want to show her how mature and responsible we can be.
All right. Why are we up today? Does anyone know? No, but we're trading higher. HYMC is ripping. We can talk about that. We're going to talk about why the market is up. We don't really know. Spoiler alert. We're going to talk about Alibaba. We're going to talk about
Yo, I checked my
AB's trades.
Well, yeah, we can check my trades, but I also checked my investments, like in my Roth, my long-term retirement portfolio. Okay. I'm checking it right now to make sure this is still true because it was true an hour ago. But literally every single stock in it is green today, which I don't know if I've ever seen because there's kind of a diversity of types of companies in there. Oh, nope. It's not true anymore. Southwest Airlines is now down 0.18. Can someone tell me why this is in my...
Wait, what? You have Southwest Airlines in your... What is this? Your long-term...
Yeah.
Your like 401k?
Can you tell me why?
Why? No. Why did you do that?
I don't know.
Fire your advisor.
Should I sell it right now?
Who's your advisor?
Me. Should I sell it right now?
Fire yourself.
Should I sell it right now? I'll do it right now.
Good luck. Yeah. I mean, why not?
Well, I kind of want to wait till I'm in the green on the trade.
Dude, that's not... That ain't it. Hey, welcome, I don't know how to... Black Mage? I don't know. Black Mage, new member to Benzinga's YouTube. Welcome, Black Mage. Because you're a member, your comments look all highlighted and pretty. You can also use emojis of Aaron and myself in the chat. If you just...
happy to clarify, I just meant today. I'm definitely not green on every single stock in here. In fact, QuantumScape, I'm down more than 60%. But hey, it's up 3% today. Not bad. Yeah, it's fun.
There was a time when I was up in everything. In the late summer 2020.
Spam risk call from Green
late summer 2020. I was up in everything. That'll never happen again. It was amazing.
Well, this is funny because I feel like it's kind of like this holds true for not just my portfolio. Like I think Warren Buffett has said something along the lines of like, you only need a few like big winners to make your...
Yes.
That's a Warren Buffett quote.
It's Munger or Buffett, but yeah, if you take away like the handful of big winners like 10, 100 baggers that Berkshire's had, their returns are actually like good, but like pretty average. It's just they had a couple of just like big time winners.
Yeah. So I'm going through my positions right now, and once we play the intro and start the show, if we want to make this take 5 minutes to do this, I can go through every single position that's in my long-term portfolio because it's not very big, and I had a thesis on all of them. Whether that thesis has held true or if I still hold it, TBD. But I'm going through it right now, and 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. There are 12 stocks in there. 1, 2, 3, 4, 5, 6, 7, 8. 8 out of the 12, I'm in the red on my overall position, but my portfolio itself is in the green
because
Nvidia, which is my biggest position, is up 48%. Ford, which is another big position, is up 56%. Apple, which is My second biggest position behind Nvidia is up 25%, and then Sunrun is up 33%. Those four with the how much they're up and the weighting of it actually has my portfolio in the green, even though 8 out of the 12 stocks that I'm holding are overall in the red.
Phil Hall just commented that it looks barren behind us. Part of the reason for that, Phil, is I think over the weekend, they took down the ice skating rink. Not take it down. What's the right word there? They disassembled
Dismantled.
They dismantled the ice skating rink. So there is no more rink behind us now. It's officially summer in Michigan.
I was really good at dismantling things as a kid. Like things I wasn't supposed to dismantle, but I would. Basically, I would just break a lot of things.
Yeah. So they're going to be turning this square behind us into what they do every year when the weather gets warmer is they dump a lot of sand there and they turn it into like a bar, which is going to be a lot of fun. Looking forward to that. But anyway, guys, welcome to Benzinga Live. Smash that like button. No David Green today. Here's the deal. David Green has an internet outage, or so he claims. He said there's a massive outages in his area. Oh, I didn't ask who his provider was. I should have asked who his provider was.
So we could short them?
Yeah. Unfortunately. So no David today, but he'll be back next week. We do have lots of good guests, though. I'm very excited for our first guest. Our first guest is going to be at 12:15 today. Show of hands in the chat. Did anybody watch the Gaming Wall Street documentary on HBO Max? Show of hands. Or just put a 1 in the chat if you watch Gaming Wall Street on HBO Max. I think it went on the platform, 2 weeks ago? Narrated by Kieran Culkin. It's about the GameStop shenanigans. Anyway, the reason I bring all this up is because we're going to have the director of that documentary, Toby Deml, on the show today. 12:15. Black Midge says he doesn't have HBO. He or she doesn't have HBO. Doesn't matter if you didn't watch it. We're not going to spoil anything. Well, maybe we will. It's okay. It's a documentary. There's a lot of these spoilers. So we're going to talk to the director at 12:15. I watched it. I have some thoughts. It's a 2-part documentary. It's broken up into 2 55-minute episodes. So it's a pretty easy watch, right? It's not a slog.
Oh, speaking of documentaries, did I ever tell you I watched the Beanie Baby documentary?
Oh, finally. Yeah. What'd you think? It was great, right?
I thought it was really interesting.
Yeah.
Crazy. People are crazy.
People are nuts. And that's a wrap. People are nuts. That's the takeaway for this show. All right, let's roll.
It also made me really nostalgic of
the 90s.
Just like Happy Meals, like getting toys and Happy Meals. Remember that?
Yeah.
I would like.
Dude, McDonald's is shameful.
Dude, at one point, as like a 5-year-old in my room, I had like posters from like the different Happy Meals from like the Toy Story character. Like literally, like my bedroom wall was like full of McDonald's posters, and I was like, if their marketing department saw my bed, they were like, "Yep, we got."
So yours was around Toy Story?
Something like that.
You said?
Yeah.
I had a poster. Oh, this is bad. I had a poster from McDonald's of all of the Happy Meal Pokemon giveaways.
Yeah.
There was like 150 of them. Do you know how many times I would have had to go to McDonald's to collect all that crap? Shameful. Shameful. Shame on you, McDonald's. Shame on you. Let's roll that intro.
This is Benzinga Live. Spencer Israel and producer AB.
What's up, everybody? How we doing?
Someone told me buy high, sell higher. So.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a breaking news. All right, we're back. Yeah, I saw that too. Actually, I just saw that last night. 30 in the chat. There is a documentary. Do you remember the story? It was a couple of years ago. This guy this Canadian guy.
Yeah, disappeared.
He disappeared. Well, he died. Right?
So, yeah,
he died. He supposedly died, but no one was with him when he died except his wife. And he took all the passwords and all of people's money in this crypto exchange with him. And there's a documentary coming out about that. I think coming out next week.
Yeah, Black Mage. They talk specifically about the Beanie Baby Happy Meal. That's why I brought it up. But it was really funny. They mentioned by name.
Wait, the mid 2000s? The mid like 05? There was still a market in 05?
I don't know. They talked at the end of the documentary about there being an emergence of the market now because like the
Dude,
grandkids are like going through.
Dude, no,
There's
come
like
on.
one YouTuber
no.
that had a big video, but they mentioned in the documentary by name Royal Oak. They were like McDonald's in Royal Oak,
I remember.
Michigan.
I know.
And I was like, that's so crazy. Like not even like Detroit, like Royal Oak. That's where I live.
Yeah. Yeah, that was a good documentary, the Beanie Babies one. If you haven't watched it, it's called, shoot, what is it called?
Beanie Mania.
Beanie Mania. Thank you. It's on
Okay.
HBO Max. We're giving some free press to HBO
Yeah.
Max today. Why the heck not? Let's go to the markets though. It's a green day. More or less across the board. As I bring up,
Well, it's funny. So not to, throw shade at any of our competitors. I would never do that. But I went on CNBC's website today,
Yeah.
and it's saying stock rebound Tuesday. Dow gains about 200 points, led by Nike. But what's interesting is if you look
Yes.
at Nike from the open,
Yes, this is why I love to look at stocks from the open.
it's not really. It's
down.
The markets have gone up since the open, but Nike hasn't. So how could
Yes.
the Dow be being led by Nike when it's going up and Nike's going down? Albeit Nike,
Well, no.
you can see
No. I mean, Nike was up after hours.
Yeah, today.
Right.
today.
Yesterday.
But I'm saying even in the intraday, the Dow Industrial Average has been. Actually, no, I'm wrong. Been moving lower since.
Okay.
Well, it moved open.
Yeah.
It moved higher off the open, and now is moving lower.
This is why I always look at like the daily performance of the market in two ways, right? I'll look at the, what is it on a close to close basis? Like we say, for example, the SPY is up about 1% today. That's a measure of the SPY right now compared to the close yesterday. But I also want to know about what the SPY is doing compared to the open, because sometimes the overnight moves are dramatic and can account for a disproportionate amount of that gain or loss, and you want to see what happens after 9:30. So anyway, the story of the day is we are up again. As I said, we're green more or less across the board. Here's my watch list on Benzinga Pro. You can see the only sectors that are down for the moment: energy, utilities, consumer staples, and healthcare. The only sectors that are down right now. Staples are flat. Healthcare is only down 19 cents. Utilities down 30 cents. Not a really big deal there. Energy is down more than $1, so that is notable, but it is just green everywhere. Look at what's dominating today. Yeah, Jay said in the chat too, growth over value. Look at ARK today. ARK is up 4% again.
Damn, I was literally ARK had a not so great day yesterday.
Well,
maybe I was looking at it like before because it's afternoon. We had a little rip and everything ripped, including ARK. But I was looking at some like calls on ARK, thinking, man, this thing could easily get back to $80 by this time next year if growth comes back.
Hold on. Cheryl says it's blurry. Cheryl, go on YouTube, and in the bottom right hand corner of the video player, there's like a settings box. Make sure you're on the 1080p, not like the 720p. To make sure it's not blurry. So you were gonna buy ARK? Is that what you said?
I didn't though, so
Yeah,
it's
you
like one of those woulda, shoulda, couldas. Also, same thing with Baba yesterday. Baba was down about like 5% yesterday, and I was like, I don't think I was just like, I think the buyers are here for this.
Well, Baba has news.
Yeah, so they announced they're upping their buyback program from what 15 billion to 25 billion.
Yeah.
So
wait, I love this. Okay, so like let's just say you brought up Baba. Let's just say you brought up Baba just year to date, 2022. All right, it doesn't look that bad. I mean, it's down, but like not a lot, right? Because what do we open the year at? We opened the year at 119, and we're at 116. All right, you're down $3. Now just zoom out and just keep zooming. Keep going left. Keep going left. How far down have we gone in Alibaba? Doesn't look great. So you look at this chart, Aaron, and I know you've bought the dip here a lot in Alibaba. Now what do you do, right? Because we've now rallied. This has been a very significant rally. We've rallied from 73 to 115 in a week. That's a big move. Are you still trying to buy dips in Alibaba?
Yeah, it's a 51% move in a week. I don't know. I mean, right now you could definitely say that in the short term you could have a pullback. I was just talking about just basic fib retracements with Jake Wujasik from Trendspider yesterday, and a lot of times what will happen is that, say a stock moves up 10%, that a 5% drawback, a 50% drawback from that move higher is a lot of times what we see, but then that trend continues of that uptrend. So you'll just see moves higher, 50% retracements down, then moves higher. So I wouldn't be surprised if we saw something like that. So if you go from 75 to 115, then maybe you go back down to 100 or 95, but then that trend, as long as you're not going back to that previous low, or even worse, moving lower than that previous low, then I would say, like, I think the movement that we've seen in BABA for the past week is enough that shows us this isn't just a bounce in a bigger downtrend. I would say it's enough to say, like, okay, this is showing us signs of a reversal here. So I think the uptrend for BABA continues long term. Now, whether that means we do have a short term pullback, definitely in store. So I'm not out there like today, Spencer, going to buy calls on BABA or buying the stock while it's up 10% today. But I do think that long term, the trend here is that we're reversing. And
so you maybe want to buy on a red day, is what you're saying.
Yeah, like yesterday. Yesterday.
We didn't know they were going to announce a freaking buyback.
No. But yesterday I was looking at it because, like, my thesis is that the long term, this is going to continue moving higher. And this 5% down day or whatever it was yesterday when I was looking at it wasn't indicative of that. Like, okay, this move is now over or anything. It's just healthy pullbacks in a longer move.
Okay. I spent the last month in the camp of we appear to be in a downtrend here in stocks, whether it's the SPY or the Qs or whatever. And now that we have gotten this vicious rally, it's very hard. It is very hard not to change your mind when price does this, right?
Yeah, we talk about it all the time.
We talked about that yesterday, the day before that. Do we start taking new longs on down days, right? Like yesterday, or do we? Are we still in the camp of none of the problems are actually resolved? There are so many issues at stake. We have inflation. We have a war. We have rising rates. The Fed is hawkish. Stocks are still going to go lower. What is the general opinion here? I would love to know. Here, you know what? Let's do a poll in the chat. I'm just very curious what the chat thinks about this. I'm gonna do a poll right now, and let's make the question SPY. Okay. End of this year, December 31st, 2022. Is SPY higher or lower or the same where it is now? Let's put that on I'm gonna make a poll in the chat because I would like the crowd's opinion here because I'm sort of grappling with my own indecisiveness at the moment. So at the end of 2022, SPY is, let's see what y'all think. Okay. I just put a poll in the chat. If you'd be so kind. I just need to gauge your guys' sentiment. See, Hot Dog is being sarcastic, but I don't necessarily know if this is wrong. So,
well, and that's why, Spencer, like right now, I think when it's kind of, anytime we don't know what's going to happen in the future, it's always who Yogi Berra has a quote where he's like, it's hard to make predictions, especially about the future. But in times like this, right, when you have Brian Blockchain saying the poll doesn't work, Spencer.
Your poll does not. The poll works. It works.
Anyway, my point was, even like now, especially more than even in quote unquote normal times, it's hard to know what's going to happen, what stocks are going to do. That's why I just don't think you can. If there's a name out there like Spencer, your Shopify that's on the top of
And
your
Shopify
shopping
and
list.
Unity. Those are the two. Those are the two stocks on my list. Shopify,
Right, like if they're on your list, and not only are they on your list, but they're already beaten down. Let's look at Shopify, for instance. Wow, now we're back above $700, but still down more than basically down 60% from its highs.
Yeah.
Unity, similar, maybe not down as much from its highs. Let's check.
So,
Unity is actually down. Yeah, Unity's down 50% from its highs. I would just start building a position in them.
Yeah, scaling in is probably the key, right?
Right.
A little bit at a time. I feel like everybody overweights the importance of whatever has happened in the last 12 or so months. Do you agree with that statement, broadly speaking? Like whatever the trend was for the last year is more important than whatever happened before that. So that's why you saw people trying to buy the dip. Let's get rid of Unity here. So Shopify, no, let's go with Zoom, right? You saw people trying to buy the dip all the way down in 2021 because they remembered what happened in 2020 and the stock just ripped higher. Now, all those dip buyers are exhausted. I would presume. But who wants to buy the stock now? Because we remember what happened last year. Every rip was a rip to sell. So it's hard to sort of change your psychology around that. Maybe you're right. Maybe I should just, for Shopify and Unity, just start building small positions.
I don't know what brokerage you use, but
Fidelity.
Most brokerages have fractional. Do they have fractional shares? I don't think so.
They do.
Oh, they do?
They do.
So, look, you could start just a small position in Shopify. You want to buy a quarter of a share, and then, maybe you buy another quarter of a share in 2 weeks. Like, I don't think there's any harm in starting small in a position, and if your conviction grows, then you grow your position.
All right. I'm gonna set up some dollar cost averaging purchases for Shopify and Unity. By the way, I mentioned the fact that we're on Fidelity. If you are on Fidelity, brand new thing that happened last week. Did you guys see it? If you go on your Fidelity platform, did you see Benzinga on there? Benzinga News is on Fidelity's platform as of like a week ago. Very exciting stuff. I have seen Benzinga News on. I've been a Fidelity account holder for I don't know how long, a decade, and it was very cool to see Benzinga on there for the first time last week. So if you see us in the wild, send us a screenshot, tweet at us, because we love that stuff. And Aaron in the chat asked, why does Shopify look like Unity? Because they're both growth stocks, man. Growth tends to move together. That's probably the biggest thing that I've learned in my time at Benzinga about why stocks move is it is very rare for a stock to move in a vacuum, like for a stock to move by itself.
Well, it actually, and I think for growth particularly, it makes a lot of sense because for growth stocks, you're paying for growth, right? You're willing to pay now for a company that's going to increase revenue, grow down the line. And so it's all about when growth gets hit, and say it's getting hit from the fears of interest rates rising, is because there's money's going to be tightening. There's going to be less money flowing and willing to pay for that premium for the growth stocks now for growth down the line. And when the economy and investments are tightening, which happens when interest rates are rising, people would rather own stocks that are producing that money now. So value stocks and not stocks that are going to be growth down the line. So it is weird, like seeing like you can put up like Roku and Asana, say, and they'll like the charts will look very similar. Roku is a TV streaming stock, and Asana is a remote work, software as a service play. So they're not related at all, yet their stock charts are going to look similar. And that's just how growth is. So I think once you get down to the financials of it, like why growth stocks get harder than value stocks when interest rates are up, those types of things. And it makes a lot of sense why stocks like this that are not in similar industries will move similarly.
You want to know what's not a growth stock? It's getting punished today BuzzFeed. BZFD. Actually, wait a minute. Is it up today? Oh no.
Oh man.
So this is a they just reported their first ever earnings report as a public company. And if you can think of a company's trajectory on a spectrum, right? On one end you have growth, right? And how do you get growth? You aggressively spend money, right? You don't focus on profitability, right? You don't focus on the bottom line, on actually making money on your EBITDA or whatever. You focus on your top line revenue, right? The profit, and the logic goes that the profitability will come later. Those types of companies, the growth companies, typically are assigned a higher premium because in theory, they are growing more, in theory. On the other end of that spectrum, you have your companies that are focused less on growth and more on bottom line profitability, actually making money, positive EBITDA, earnings per share growth. And that's basically what BuzzFeed said today. They are focused a lot on actually making money as a company, and they their news division is a loss leader. They're doing some layoffs there. The SPAC was kind of a disaster for a lot of people. This does not look great right now. If you bring up that chart back, so this is a company that on the private markets grew and grew and grew and grew every year because private valuations never go down apparently. But now that it's gone public and Wall Street has to figure out, okay, how do we categorize this? How do we label this? Is it a growth stock? Well, no, because they just said they're focused on growing on positive EBITDA and profitability. So they're not a growth stock. Or are they a value stock? Well, I guess they're a value stock. They got a trailing price to earnings of 39 though. That's off the high for a value stock. So they're not really a value stock. So what are they? They're not growth. They're not value. What are they? They're nothing.
Well, I don't know, but I do know that there are some other media companies that are publicly traded, and I do not want to, nor do I own any of them. Well, I don't know if I have any exposure to any of them via any like funds or anything, but whether it's, what is Maven called now? Arena Group? The Arena Group?
Oh gosh, I don't even remember.
AREN, yeah, the Arena Group.
Is it really? I totally missed that. AREN?
Yeah.
When did that happen?
I don't know.
So this is Maven. This is the company that owns
The Street
and
Sports Illustrated. Which, by the way, I'm looking at it right now. It's saying the market cap is 157 million. Doesn't that seem low? I mean, that's like what Benzinga's market cap would be, and Sports Illustrated plus the Street together.
I don't know what our market cap would be, honestly. Maybe. I have no idea.
Well, we had a value when we were acquired, or an enterprise
that's true.
value.
That's true.
But I'm saying like the Sports Illustrated is like a huge. I guess like
Nah, they're not that big anymore.
really.
Yeah.
I mean, we have a whole like licensing data part of our business that like Sports Illustrated probably doesn't. Sports Illustrated, like, did they just like fuck up by not like getting into like social media as heavy as like Bleacher Report? Yes, you know what I'm saying? Like, it seems like they really fumbled the bag.
Well, so part of it is the fact that I was an intern at SI for a year. I was a social.
Your initials are also SI.
Right. I was an intern. I was a social media intern there from.
So it was you that didn't get into social media.
That was the problem, right? It's because they had me.
Yeah.
Summer of 2012 till the summer of 2013, and part of the problem was they were kind of tied down. They were weighed down by this magazine business, right? They had this legacy magazine that. It was your classic innovator's dilemma, right? They couldn't get rid of it because so many people still read the magazine, but it was also holding the company back because they had all these resources committed to the magazine. The magazine, when I was there, at least, and again, that was a decade ago, the magazine still determined, like the flow of the company. Like the company kind of moved around the magazine schedule. Obviously, nobody reads magazines anymore, but so that was part of it, right? They had the innovator's dilemma of an outdated product that they couldn't get rid of, but also couldn't really grow at all. It's tough. It's not easy. It's not easy to change.
I did that as a kid. They had a deal where if you got Sports Illustrated subscription, you would also get a free copy of Madden.
Oh, sweet.
And I did that.
I just remember that I was a SI subscriber for my entire childhood. And then one day in college, they just stopped showing up, and I didn't even notice for like the whole semester.
Yeah.
I was like, "Whoa, did my SI expire?" I didn't even realize it. So that was the end of that.
I had a subscription for a very long time and like saved every copy.
Me too.
Probably still have them somewhere,
Yep,
but
me too.
I
was an SI for Kids subscriber. My first issue was Alex Rodriguez signing a $200 million contract, or whatever. We're getting off topic here. Let's go back to the markets.
Well, I do. Okay, so while we can use this though to transition, I did want to talk about Amazon signing Al Michaels for its Thursday night football broadcast. So if you're an NFL fan, for the past couple of years, Amazon has had the rights to broadcast the NFL Thursday night games. This year will be different, however, because this year is the first year that Amazon will have the exclusive rights for Thursday night football, meaning the game will not be on ESPN, NFL Network, etc. So if you want to watch that game, you essentially will have to do it on Amazon and through a Prime membership, I believe, is how they're doing it.
Really?
Maybe if you
So you have to have Prime?
Maybe if you don't have Prime,
Wow.
you can still like pay to watch the games. I'm not exactly sure on that, but I do know I think it's included if you have Prime and Prime Video. But either way, it's part of a bigger trend of different companies that are into content, trying to get into live sports. We've seen Apple sign a deal with MLB to stream Friday night baseball games. So basically, Amazon, Apple, two of the biggest companies in the world, are making deals with the biggest premier sports leagues for the rights. We saw ESPN recently getting a deal with NHL to broadcast NHL games. Those are now available on Hulu. And the question is, Spencer, when does Netflix get into this?
I know it's if not, it's when, not if.
Right. Like
Yeah.
when Netflix announced, think about it. So football. What about the Red Zone? Because the Red Zone has a deal with who? DirecTV.
Yeah.
Like DirecTV owns the exclusive. If
there's two red zones.
Yeah, if NFL, if Netflix
Whoa,
got the
whoa.
rights just to like broadcast Red Zone, that would be a game changer. I think a lot of people would pay for Netflix subscriptions that don't already.
Well, that's like the last bastion of growth, right? I guess there is
video games too.
By the way, I want to put a good article in the chat. I read this last week. It was an article it was an interview with the showrunner of the Babysitters Club show, which I guess was on Netflix for 2 seasons, and then Netflix just canceled the show. And it was a Q&A with the showrunner of the show about why does Netflix cancel a show that was beloved and was apparently critically acclaimed and well regarded, and yet they pulled the plug regardless. And so it wasn't really about the show itself as much as it was about Netflix's philosophy behind content, why they choose to cancel certain shows. Let me find this for you right now, and drop in the chat. It was a very good sort of peek behind the curtain because, and we're gonna ask Toby when he comes on as well. How much info do they get? How much info do the creators get? The showrunners, the directors, whatever. How much does Netflix tell you? How much does HBO tell you? Really, it's not a lot. They have all the data, right? Everything is like theoretically data driven. And it's an interesting dynamic between the platform and the creators. And we don't, as the public, really as anyone, the public doesn't really know, right, what drives those decisions. Let me. All right, here. I just found the article. I think. Yeah, here it is. Okay. Again, it wasn't so much about the show itself as it was about the philosophy behind, canceling shows. I just dropped the link in the chat. Check it out. It was a really good read. Okay. DPRO is the play of the day. Mountain Tactical. DPRO is going to be on this show. Okay. We're going to have the CEO of Draganfly on at 1:20, 1:25-ish Eastern. So like an hour, 15 minutes from now after Christian Fromhertz. So stay tuned for that. Cameron Chell on the show today, about an hour and change. So there's that.
But yeah, so there's also a documentary about Netflix somewhere. I think maybe it was on HBO. I know it's not on Netflix.
There are several.
Or maybe it was on Amazon Prime.
Yeah, I've seen that one.
Oh, you've like watched it, or you just saw it?
Yeah, no, I know. I've watched it.
Oh, is it good?
Yeah, it's about Netflix versus Blockbuster.
Oh, really?
Yeah.
So like old days Netflix.
Netflix Speaking of, we were talking about the innovator's dilemma, right? Pivoting off of sinking products. Netflix is like the success story.
They're the king of pivot.
They're the king of pivots.
Well, also, Microsoft never really pivoted, but their investment in like cloud computing has paid off tremendously. They're like Azure, like that was not part of Microsoft's like pillar of their business,
right?
And then now it is.
Now it's like half the business, not half, but you guys get the idea.
So it's like, but like the sentiment of that, like Apple or whoever else could have made that investment into cloud that Microsoft did, but didn't, and it's paid off dividends for Microsoft.
Okay, a few things to get to before we bring on our first guest. Okay, number one, I did want to mention, if you missed yesterday's show, we had Jonah Lupton on. Jonah is the co-host of the FinTwit 2022 conference, along with Benzinga. Okay, time is not running out per se, but you definitely do want to get your ticket now, and I will explain why. There's two different events happening at the FinTwit conference, and I'm going to put the link in the chat. It already is in the description. Okay, there's two events here. There is the general admission event, which is exactly what it sounds like, and there's an event within the event. Okay, there's an exclusive Benzinga workshop that we are capping at, I believe, around 45 or 50 people. I don't know how much room we have left, but I would advise to not wait till the last minute. So I just put the link in the chat. Use the code BZYouTube20. BZYouTube20. That will get you 20% off either ticket, either the GA, the main general admission, or the Benzinga workshop. The same discount code can apply for both. So use it, please. BZYouTube20 to get 20% off. The link to this is on the screen. It is in the chat. It is in the description. Cannot recommend it enough. We're going to have a bunch of the speakers from that conference on this show in the run-up to the event, May 13th and 14th. So like less than 2 months from now. Check it out. That was the first thing I wanted to say. The second thing I want to say, it can wait till after our first guest, actually. Speaking of our first guest, I see him here backstage. I think we can bring him on. Toby Deml, the director of Gaming Wall Street on HBO Max. And
so you said Deml. I was gonna say Deml.
How about this? Let's argue about this and leave him backstage forever, and just argue about his name, you and me.
All right, Deml.
Right.
So here he said most Americans say Deml, and I think if most Americans do anything, they're probably wrong.
So you're not most Americans.
No, I'm taking the counter. I'm betting against the public here.
All right. Well, let's see how Toby pronounces his own name. Well, let's see. All right, Toby, how do we do on your name? What's going on here?
You guys did pretty well, I would say. It's gotten butchered, but yeah, the original pronunciation is actually Deml, which is impossible to say in English.
Oh, so you were closer.
Deml.
Yeah, Deml,
okay.
Deml. It all works.
All right, excellent. Anyway, as we were saying, Toby, you're the director of this Gaming Wall Street documentary on HBO. Was able to watch it, and first off, very nice job. Very cool that you got Kieran Culkin to narrate. It was a weird like Succession mashup there, right? Because he's obviously on that show, and I'm a big fan of that show. I guess my first question is this: what was the impetus for this? And it seemed like you started working on it not long after all this happened. It's kind of the vibe that I got. So, like, what was the impetus behind this documentary?
Yeah. So maybe on the Kieran question, because a lot of people have talked about Kieran and asked about Kieran. So for a very long time, I was very much against having a narrator. But HBO kept saying, look, we should really have a narrator. And I was always like, we can't have a voice of God that explains the stock market. It's just not possible because nobody truly knows everything in the stock market. But then this idea came up with a character, and Kieran has played this fantastic character in Succession, Roman Roy, and that was a perfect fit. So just on that front, because a lot of people are curious about it. But yeah, on the impetus and the origin story of this project, this actually happened before GameStop became a really big thing. This really happened because I got very curious about Wall Street bets.
Okay.
Sorry, do I have a feedback here?
I hear a little bit. I hear if you can mute your computer speaker, maybe that will.
My bad here.
Yes.
I've got headphones on. Hopefully that's better. Is it working?
A little bit.
All right.
Still, like it's almost like when you're on the radio in the car and the radio is turned on in the car and you can like hear a little bit. But you know what? I think it might be better now.
Copy that. Okay.
No. All
right. So basically, the origin story of this was really that I found Wall Street Bets. And I fell in love with this place. And I was like, this is crazy. This is totally bizarre. This is like the wildest place that I've seen on the internet in a very, very long time. And there was this very unique moment in the pandemic where people started getting, interested in baking bread and stocks. And it was kind of a revolutionary time where suddenly people had enough time on their hands to actually go into and learn about the stock market. And I was like, this is kind of unprecedented. And then there's this like totally wild version of that inside of Wall Street Bets. And so I was like, this is fantastic. I want to make it.
So this was even before GameStop. This is before GameStop.
Yeah, and GameStop was just one of the many crazy ideas.
Yeah.
So Toby, something I'm curious about, which maybe you kind of just answered, was you had a keen interest in the stock market and the happenings, what were going on before you started this film. It wasn't that you saw this story and then as like a filmmaker, as a storyteller, you thought, oh, this is a great story, I want to go tell it. And then you had to learn all these ins and outs of the stock market. You were already interested in the markets before?
Yeah, and this is sort of a longer backstory. My dad has been an activist investor. He's been publishing a sort of ESG. He's started writing about ESG 30 years ago before ESG was a thing. And I always found it super boring. I was like, stock market, ESG, whatever, charts, like complicated balance sheets. Like, I never got it, and I always felt kind of stupid. And he's been publishing this newsletter out of Austria. It's called Eco Invest, and it's all about how to invest in ethical, ecological companies, and basically drive the world in a direction through activist investor dumb, if you will. And so I was always curious: could I finally learn this thing that my dad does for a living? Could I finally understand this world? So during the pandemic, I finally had enough time myself, right? Like many other people that got involved in stocks. And so Wall Street Bets was this great place that kind of took away the complication and the boringness and the dullness of it, and just made it all really fun and wild and crazy. So it didn't come off the headline. GameStop is like the number one headline in the world. It came from this much sort of longer moment of like investor activism and people mobilizing online and trying to do something wild together. Yeah.
So what did your dad think of everything going on with the GameStop?
So interesting.
he kept emailing me. He's like, you gotta sell, like this is totally crazy, it's gonna crash, like it's never gonna stay up there. And I was like, Dad, it's gonna go into the thousands, you don't understand, like maybe you've had a career in 30 years on in investing, but this time it's gonna be different. And so I was in the middle of all of this, and I feel like it was one of the kind of, it's a complicated thing when you're a documentarian that's actually involved in the subject themselves, right? Usually you want to be kind of an observer and you want to be impartial and whatever. And I've tried to put all the checks and balances into place of having a very diverse team in terms of how conservative various people are on the team. On our producing side, we work together with a hedge fund manager and a securities analyst to caution people against investing in meme stocks. And I was a meme stock investor myself, and I saw my account go like this and back down, and I held throughout all the craziness, and I had all of this emotional memory of what this was like, right? This was a very unique moment in Wall Street history, I think. And so we really wanted to capture that emotion that a lot of people went through. And the outcome is the doc, pretty much.
So wait, did we already address your GameStop trading as well? So did you sell, or what happened there?
I actually, once I started filming, I was like, I can't buy or sell anymore. Like, it would be against sort of the potential impartiality. I don't have a gigantic position or anything. I don't think it's a position large enough to sabotage my impartiality in the story. But it's a big enough position that I went through a lot of emotional turmoil during all this time. I tried out options, and I mean, this was just so incredibly stressful. And I feel like it gave me this like idea of like, what did people go through when all of this happened? Because I was one of them.
I have so many questions for you, and I'm trying to figure out the order in which I want to ask them. It seemed like you found a lot of your sources simply by reaching out on Reddit. Is that accurate? And did you try to talk to people like Roaring Kitty, people like Vlad, et cetera, et cetera?
Yeah, great question. So our initial sort of round was definitely through Reddit, right? We found a lot of fascinating individual stories, many of which eventually made it into the documentary, right? So we traveled all over the United States. We went to like 10 different states for filming, because everybody's all over, right? Like, it's one forum online, but people are physically very far apart from each other. And we also tried to not just get the retail investor side, right? But later we went deeper and deeper into this sort of mad world and this rabbit hole of Wall Street. Once we teamed up with the Biltmore Films team, who had made a really great documentary called Betting on Zero, which actually followed a short seller betting against Herbalife, the pyramid scheme.
I've seen that.
It's a really great doc, and I was like, I want to team up with somebody who is more sophisticated in finance than I am, right? Because I want to tell the story not just for the people that were in it, but for a larger audience. And then I have to be really responsible. I have to tell a very complicated finance story, and I got to have sort of the backing of somebody that really understands the space. And so John Fichthorn and Burke Kuntz from Biltmore Films, they're Wall Street mainstays. John ran a pretty sizable hedge fund. He's a professional short seller himself. So we kind of tried to get this perspective, right? Like, what is the other side of the story? What is the short seller's perspective? And we did.
So that seems like how you got connected with the guy at Better Markets and the guys from Connecticut, right? That seems like
that was on our own. So we had a pretty good mix in terms of who Biltmore Films brought to the table and who we brought to the table. So I found Dennis Kelleher initially actually through the House hearing. I was like, this guy is great. He has so much to say, and there's so many fascinating layers to his analysis of this problem. So I reached out, and Dennis is awesome. We visited him in DC in his office, and he's a really great character. And then some of the people we found, and some of the people the team from Biltmore found.
What is your take on who won and who lost this whole saga? Because for people that didn't watch it again, it's broken up into two parts. The first part is pretty much only about the Wall Street bets side of things. And the second part is not about that at all. It's more about naked shorting and the system out. It just zooms out in scope a little bit. From your point of view, Toby, who won and who lost?
I think it's a great question. It's a question that HBO kept asking all the time, right? Like, who are the winners and losers? Can we just do a little ranking? I think in the stock market, this is one of the fascinating things about it, right? As long as you don't sell, you haven't won or lost. It's all on paper, even though you're getting to a likelihood of winning or losing, right? And so at some point in the end of episode 1, we sort of drew a tally over like who gained and potentially lost, but much of it was on paper, right? A lot of the characters in the documentary have not sold their position. Some of their positions are unknown, i.e. Roaring Kitty. Nobody knows what happened with his position, whether he sold it, whether he kept it, whether he did, pluck it up in pieces. But I would say a lot of people won, a lot of people lost. A lot of big people won, a lot of big people lost. Same with the little people, right? It's really across the entire spectrum how people rode this wave back in January 2021, and then how they kept going, right? Because this stock has had a crazy development ever since, and I think remains completely unpredictable. And I think the thing that really won is a sort of bigger picture transparency push and a need in the market to say, hey, some of these systems are incredibly vulnerable, right? The DTCC has not done a shutdown in this sense before, and it wasn't really a shutdown. It was just a collateral call that many of the brokers could not afford. And this sort of market structure conversation, I think, is a huge win for society, because it put into the forefront complicated issues that eventually will affect the sort of reliability of a market, right? And I think every securities market, every stock market in the world can benefit from being more safe, more accountable, more transparency, right? That's really what drives foreign investment.
Yeah. I'm thinking back to that time and like seeing a short squeeze. I mean, it was a notable short squeeze, but it was within the realm of possibility. And then when all the brokers basically got collateral called by the DTC, that was like a what the heck is the and you even had the guy from the hedge fund in Connecticut that was like, I had never seen that before. That was freaking nuts. And that's when people are like, whoa, hold on here. How fragile is the system if a bunch of people on Reddit can break it? So was there anything that you didn't expect to learn, and any conclusion that you didn't expect to have, any perspective that you were not sympathetic towards that you became more sympathetic towards in your production of the movie?
Yeah, it was actually very interesting, right? When Biltmore came on and we started talking about what are the more interesting sort of in-depth issues here, I said, there's this kind of crazy conspiracy theory on Reddit. It's called naked short selling. It's totally bogus, right? And they're like, no, it's like a real thing. And I was like, no way. I mean, it literally is the making of a conspiracy theory. And they're like, no, this is like completely documented. This is totally factual. It's just something that has been sort of pushed to the fringes. And I was totally taken aback by that. Going way deep into the system and into the various violations, right? We did an enormous amount of research on the various violations that the largest investment banks, the largest prime brokers in the world have. We just started seeing this kind of crazy system that, in my mind, is kind of unimaginable to an audience. And I think even in the doc, we can't fully capture how strange the accountability component of Wall Street is. So that was, I think, really the biggest surprise for me, that there's actually a lot of problems under the hood that are still out there, right? And so to the many people that have had these, extensive conversations on Reddit about naked short selling and similar kind of financial violations that are sort of gaming the system, they have gotten less in the years, right? Like if you look at naked short selling in 2004 versus what theoretically is happening at the moment, it's clearly decreased, but it's what I like to kind of look at it as, or to explain it to people, is there's a bunch of different things in the market that basically create loopholes and lack of transparency and lack of accountability. That creates a certain amount of demand in terms of the firms that have enough power to make a financial calculation between legal risk and investment risk, right? And so things like naked short selling, and there's a few other ways to game the system, are essentially free money. Or as a insider that talked off the record to us, that told us about extensive ways that he had gamed the system in the past, he calls it free cheddar. It's a free way of making money if you're in a position of power. And the only risk that you have is really getting caught. And then the crime or the fine, really, because it's not criminal, it's always civil, it's just sort of a calculation on your line item sheet. So that part of the system, I think, is very risky and is very... It needs a lot of reform. And part of it is just in 2008, right? You had throughout the doc, we talk a lot about 2008 for a specific reason that was a similar gaming of the system. It was gaining kind of illicit profits on the backs of making really irresponsible bets. And there's currently still no proper system in place to stop another thing like this from occurring. Right? And so the DTCC was a good sort of safety buffer on the Reddit side. But on the other side, on what the largest banks can do, there's not really a good safety buffer at the moment.
Do you think the stock market is rigged?
I think the market has a lot of layers to it that can be gamed by the people that have enough access and knowledge to game it. And that in itself could be seen as rigged. I would say it is not inherently rigged by design. It is not inherently rigged because everybody's evil, or because these people are in some crazy conspiracy where, everybody's like huddling together. It's really that it's such a complex system. It is so old and it's all built on the leftovers of the past that the people that are smart enough to game it and are willing to bend the rules, not break the law, right? Because the law is so limited in its actual capture of the market, right? And then you've got a lot of other problems like regulatory capture, revolving door. All of these things, I think, can contribute to a perception of a rigged market. And I would say that Michael Lewis is right when he says that certain aspects of high-speed trading are rigged just by design. But for the most part, the market is it is not inherently rigged, and it can be reformed properly if there's enough public pressure.
That's a great answer. It's not rigged, but it can be gamed by those who know and have the ability, the capability to do so. That's a really good answer. I agree with that whole, because I'm watching it, right, and I'm like, and especially in part two, right, because that's when you're talking more about like the system, right, and the why the market is the way it is, and like I'm watching this and I'm like, well, what do you want me to do, man? Okay, what do you want me to do? I'm just a regular person. I'm just trying to like save for retirement. Stop trying to like talk me out of it, because that's what it felt like, right? You were like, and I'm watching this and I'm like, damn, like it's so messed up. But what else am I supposed to do? But I really like your answer, right? It's not rigged. It can be gamed. It's complicated. That's just the way it is, unfortunately.
I think on that point, right? I think it's very important to make clear, and we try it very hard because it's a complicated message to send across, a complicated takeaway, right? The market has all these problems, but you do want to engage with the market, because if you don't engage with the market, there's really no way for you to have a sustainable growth of your own savings, right? Like it's really the basis of all retirement funds is the stock market or some sort of equities markets. And so our takeaway is, and I think Harvey Pitt, who's the former chairman of the SEC and was in the doc and is a really cool guy, and we went to his house and he's full of wisdom. One of the things that he said is, an educated investor is our best weapon. And I think that holds true at a large distributed basis, right? If everybody in the public, not everybody, that's unrealistic, but if a lot of people are educated in how the market works and where the weaknesses of the market are, there's enough possibility for public pressure to build both towards the SEC and towards Congress, because you kind of have to really have all stars align for proper market reform, right? This is a long game. This is a marathon to fix the current market structure. And there's some really great initiatives that we have become part of and that we're officially supporting as the documentary, like We the Investors, which is run by Dave Lauer and which is mostly towards transparency. And then the Better Markets efforts, which is about advocacy in Washington, D.C. Because I think a lot of people don't realize, right? Like when it comes to the lawmaking process, there's still a huge amount of influence from various industry through lobbying and through advocacy. And there's unfortunately very little on the consumer, on the sort of individual retail investor side that pushes against that massive amount of weight that the large banks put into the system on convincing politicians to, make decisions that are in their favor.
Yeah. We're on the line here with Toby Deml, who's the director of Gaming Wall Street. Toby, so when just to wrap it up here, when you decide to make this documentary, do you how does that work? Do you shop it around? You go to Netflix, you go to HBO, you go to Amazon, you go, or do you have a relationship with HBO, or how does that process work?
It was a really fascinating process because we don't have, we're a very small company at Prodigium Pictures. We're mostly specialized in social impact entertainment. And so we really look at how do entertainment pieces change the world and how do they actually help mobilize society to become better. And so we don't have crazy relationships where I just call up somebody at Netflix and say, hey, I've got a new project. So in this case, it was really a very humble beginning. Me and Tessa Byford, who's the producer, it was just the two of us. We decided we're going to do this project. I've waited for the last 10 years. I've been, there's the sort of like overnight success kind of idea, right? It takes a very long time to get to a place where you kind of know all the little pieces and what might work out. And so I've waited for the last 10 years sort of in the wings for a chance to direct something like this. And I was like, this is a perfect fit. I don't know anybody in my own sphere that would be better at directing this, because I have all these weird little pieces of knowledge like internet culture, finance, financial fraud is one of my hobbies. I write a lot of Wikipedia, and financial fraud is one of those topics I love writing about. And so we did this doc very small, and then we said, look, we need to team up with somebody on the inside. That was Biltmore Films. And then Biltmore brought on their former partner from Betting on Zero, which is Gunpowder and Sky. And Gunpowder and Sky is a company that has a lot of influence within the documentary sphere. They've really done a bunch of really fantastic documentaries. And so they said, you know what, we should shop this around to a few different places. We pitched to 3 different contenders. One of them was HBO Max. And it was sort of will never happen. This is not for HBO Max. Like it's not quite their thing, finance stocks or whatever. But HBO took a liking in it, and they said, okay, we'll do this. We'll do this together. And so HBO came on right around the end of post-production. We shot about 80 hours of footage. We had collected 84 hours of Roaring Kitty YouTube videos, all transcribed, right? It's like enormous amount of research and how to present Keith Gill in a fair way, which I think hadn't been properly done before in a lot of sort of the larger media coverage of him. And then we said, okay, let's go. And so we had 6 editors working pretty much around the clock, and we were operating in like 5 different time zones, 4 different continents, like 7 different countries, 30 people for 3.5 months straight. It was like 14 to 16 hours a day, 6 to 7 days a week. It was an enormous lift to bring the super complicated finance topic and make it accessible to a very broad audience.
And then just out of curiosity, how much does HBO tell you about how your documentary is performing? Because this is what I really want to know. Right? Like, how much data do they give you?
It's a great question. So one question that people have asked a lot is, what's the level of censorship, right? Like, who are they beholden to, right? Like, HBO is part of a large corporation.
Okay.
And I can't say, from an inside experience, they have been an amazing creative partner, and there was 0 censorship on this. They said, you want to talk about naked short selling? All right, do a good job and make sure you can document everything. There's a fact-checking process. You can't just make stuff up. But there was 0 censorship, which I found amazing, right? Okay. Because in the documentary, there's a lot of different people that we point out their various violations in. And then in terms of what they tell us in the data, that's one of the secret sauces of the big streamers. Netflix, HBO Max, they all operate under a principle of sort of, they hold the data internally, and they told us that it is performing up to their expectations. So that's what I know. And
that's it. That's all you get. That's all you get.
That's what we get from them. There's a lot of sort of in between the lines, right? Like, you have these are really nice relationships. They're really great people, and they give us a lot of feedback. And one of the things that they actually I wouldn't say came up with, because I suggested it earlier, but they were really supportive of. They said, why don't we break the news on Reddit, right? Because to some degree, we all have to thank Reddit for the story to actually happen. And so I was able to break the news on Wall Street Bets and Super Stonk and a bunch of other subreddits before the press actually found out about this project, because we've been operating stealth since the beginning.
Awesome. All right, last question, Toby. Who is the one person that you did not get that you wanted to get?
It would be a close second between Keith Gill and Ken Griffin. Those were 2 people that I really tried. And, we reached out to Citadel, we reached out to Melvin, we reached out to Robin Hood. I think Vlad had been in enough, so his archival was plenty, but Ken Griffin is somebody who never talks. So, and then Keith Gill, we went to the end of the earth to try to get Keith Gill to be in this doc, but ever since this all happened, he got into some trouble with some of the regulators and the finance sort of component of it. And I think he's just gone totally off the radar. And we wrote him a very nice postcard with a bunch of small cats on it. And it was like a Halloween postcard. But unfortunately, he never responded to our many communications. And for Ken Griffin, we talked to the guys at Citadel. They were nice on the phone, but they I mean, it was just even us asking, how much money do you make with payment for order flow? They say it's a cost to us. I said, well, it's a business model, so how much money do you make with it? And it kind of stalled even at something as simple as that. So for many of the other really interesting questions that we ask in the doc, i.e., could Citadel have collapsed because of the massive call options activity that they were possibly not able to hedge against right when this happened? All of these fascinating questions, I was never able to get an answer for.
Yeah, that's a feature, not a bug. Christian from our chat wants to know what your next project will be. Do you know? Do you have any idea what your next project will be, and will it be stock market related?
Great question. We are planning together with Biltmore Films to do a sort of, in the realm or in the spirit of 30 for 30, but for finance. We see a really great need not just in the United States, but all around the world in financial education. And some of these stories are so fun and they're so crazy. There's these wild characters like King Griffin, right? Characters like Roaring Kitty, where you can really kind of get a personal feel to it and learn something about a topic that's really complicated. So what we're planning to do somewhere down the line, right, like we'll still take a lot of partnerships, so like who would be the distributor for it and that sort of stuff, but would be a series of financial documentaries that all have this really great human component where you can identify with people and learn about their stories, and then also tell the sides of the story that are a little less obvious, like Ramona Ortega in our documentary talking about equity and access of people of color and women to the stock market, which is a part of the conversation that would have otherwise been missed, kind of. So that's sort of what's up.
All right, I could have had you here all day, Toby, but I want to be respectful. I want to be respectful of your time. Toby Deml, the director of Gaming Wall Street. Again, check it out, guys. HBO Max. It's a 2-part documentary. Very easy watch, broken up into 2 parts. Toby, it's been an absolute pleasure. I have 30 more questions, but alas, that's life. Thanks for coming on the show today, and great job. Seriously, great job on the documentary.
Thanks so much. Great.
All right, guys. That was a great interview. I have so many more questions. Like I wanted to know more about. They spoke to. Do you remember that viral? There was like degrees of virality on Wall Street Bets, right? They were like,
Yep.
Right. There was one of the most viral posts on Wall Street Bets was from a guy who was homeless, and he was like, I'm homeless, and I bought GameStop, and they talked to that guy.
I don't remember that one specifically.
Yeah. And I was like, when I saw him, I was like, damn, I remember that post. I remember seeing that. I was like, holy crap. They talked to him. Seriously, it is a great documentary. The problem with a lot of finance documentaries is what Toby hinted at, is they can be a little bit dense. This one was really not. If you were here last year, if you were living the GameStop saga in real time, then a lot of the first part you already know, you lived through it. The second part, though, really is the part that I learned a lot from, because it wasn't so much about GameStop per se as it was about the system. So a lot to be learned, even if you lived through it. So check it out. Again, HBO Max, Gaming, Wall Street. And Kieran Culkin is awesome.
I still haven't checked out Succession at all. I got to, Spencer. I have to watch it.
You really should, man.
I know, that's what I've heard. But yeah, I love it. And what Toby was talking about at the end too, kind of what for future projects he might be working on. I think that, like Toby said, is like there's a hole out there, right, for that type of educational content of, like you said, Spencer, a lot of it's very dense, so it's hard a lot of times to watch, a documentary about something finance related if you don't know the ins and outs of what's going on. Like I mentioned, I watched the Enron one a few days ago, and there were like things that they were talking about the Enron one that I had no clue what was going on, and I work in financial media, like I should know this stuff. So I love that idea. I think doing more of those types of little documentaries that have the human aspect in them as well, because we talk about stocks and how they're moving all day every day, and it's hard, or it's easy to forget sometimes that these are like human decisions at the end of the day, driving market moves and sometimes computer decisions too.
Yeah. I just think back, there is this inherent conflict, right, between institutional and retail investors. And the only thing that really separates them is the fact, because institutional investors are just made up of a bunch of individual people that happen to have a lot of capital behind them. And the implication there is that if you have capital behind you, then you know more, right? You have more knowledge. You have more tool. You have more tools. You have more data. That means you have more knowledge. That means you're smarter. That means you're better. And as we saw, that is not that's not true. That is not true, right? God, that answer that he gave about are the markets rigged? I'm going to transcribe that answer and commit that to memory. And then the next time somebody asks me about that, that's what I'm going to say. The market is not rigged, but it has layers, and those layers can be gamed. And not everyone, it's not because everyone is bad actors or evil. Yes, there are some bad actors out there, but it's a product of a complicated system that needs to be changed. And of course, we all know why it hasn't been changed, is because it benefits people the way it is now. But that was fantastic. Yeah, Christrian, I agree with you. Like, I agree with both your comments. Actually, I agree with that comment. We should definitely do more here with Toby on this, and I agree with this comment. And that's what they said in the thing. When that buy button got shut off, game over. That was it, right? And yes, trade green. You're absolutely right. They have different rules, which is also part of it. But if you go into Goldman Sachs, right? Go to someone on the IB desk, pluck them out there, right? Drop them, in their apartment. At the end of the day, they're not that different from me and you.
No.
Maybe they know more things. They have a better education when it comes to finance and more experience, and they know how to, do a discounted cash flow or whatever. But like, they're not that different. Retail investors know that stuff too.
Yeah, speaking of GameStop, how's GameStop doing today? Up 20%.
Is it what? Is it? No, it's not. Is it really?
It is right now.
Hold on. Let me go to
It
the
spiked when Toby came on the show.
No, it didn't.
Yeah, it did.
Stop messing with me. It did not. I'm pulling it up on the screen right now. GME.
I'm telling you, Wall Street Bets was watching.
Holy shit, you're actually right. What the hell? When did Toby come on? Right, Toby came on right here.
Yeah.
Let me zoom in. Yeah, no, let's go to a 1 minute. All right, Toby came on at 12. It was like, where was it? It was like right here. All right, something just happened right there though. At 12:30. That's heavy volume. Was there news?
I don't know. I mean,
it's just trending on social? Huh. That's weird. Anyway. That is very unusual. Wow. Christrian, I don't want to move markets. Can I be honest? I hate when that happens. I do. I don't like moving markets.
well, let's be clear. I don't think anything.
It gives me a queasy feeling. It's happened before.
Oh, yeah. I'm saying this is not one of those.
No.
instances.
This is not. We didn't move GameStop just now. Obviously,
But like HOFV that one day.
yeah, we've moved stocks, and it gives me a very queasy. I don't like moving stocks.
I think
It gives me a very queasy feeling.
it's fine.
Mountain, maybe you're right, Mountain, but I don't know. Anyway, you think it's fine? You think everything is fine? I'm the more conservative one of the two of us.
I'm
So-
saying like, I don't know. Like
Whatever.
if you were if the reporting's legitimate and you like
Yeah.
ask a question to a company and the stock
Yeah,
moves because the
yeah,
CEO
yeah.
says something on here, then that's
right.
what it is.
Well,
Like, it's not good or bad. It's just it is what it is.
Let's talk Nike for a second here. Their earnings were actually pretty good last night. EPS beat, revenue beat, making more money from their e-commerce and direct-to-consumer operations. That continues to be a growing part of their business. Stock up big after hours, down from the open today. Still in the green. You can see they're still up 2 2/3%. But as I said yesterday, the bar was low because Nike had every reason in the book to post a miss.
Yeah, I mean, I think a lot of people were expecting like, oh, Nike to deal with inflation and rising
Yeah.
shipping costs and you name it. But I think a lot of that maybe we'll see in the next earnings report, the one from this quarter. But I do think it's good news for maybe not retail as a whole, Spencer, but kind of the leaders, right? Like Nike, I'd put in the top tier class with like Lululemon. And I think like for a stock like Lululemon, you could extrapolate from Nike's report and say some of these the biggest names in the retail space are able to offset some of these costs, whether they're inflation driven or rising shipping costs. It's just that it's the same thing we saw with the airlines during COVID, was that the biggest and strongest names came out stronger out of the times of uncertainty.
Yeah.
So I see something similar with here where like some retailer, whoever might be getting hit, Nike and like the strongest ones will come out and will prevail.
Well, Nike said on their call that they are able to raise prices. And why? Because they have pricing power. Because they're freaking Nike, right? Like Nike can raise prices.
Right, and I think same with like
Right.
the other, Lululemon,
Yeah.
some other names out there.
They
You
have pricing
can't say
power.
that about like Gap, right? Gap can't raise prices. If
Yeah,
Gap
it's not the same.
becomes too expensive to walk in there and buy a cheap T-shirt, Gap loses its customers. It's not the same as Nike, Lululemon. What are some other names like that have that pricing power?
You mean in retail
Yeah,
specifically?
Adidas maybe.
By the way, I had a college professor that called it Adidas.
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 All day I dream about sports.
Oh, whoa. Is that from their? Is that like their slogan or something?
I think so. All day I dream about sports.
Is that why it's called? I don't know what other retailers have the same kind of price. I mean, Nike's the king of their vertical. Lulu is the king of their vertical. I don't know.
Holly in the chat's talking about Burke B. So I did want to, because we mentioned, we talked about Warren Buffett buying.
$10 says it's up today.
Oh yeah, I mean that's an easy bet.
$10 says it's up today. Let's see. Oh, I can't type. I was like,
You're up 0.8%.
I was like, why can't I see it? Because I was typing the wrong ticker.
We talked about Berkshire buying Allergy. What was it called?
You're close. Allegheny.
Ticker Y off the market yesterday. So, but I was doing some more reading about the acquisition last night, Spencer. Warren Buffett has been hinting at a big, quote unquote, I think he called it an elephant move.
Yeah, was this it?
No,
Oh.
this was not. So Berkshire's been famously or infamously sitting on a bunch of cash over the past few years. They have like $150 billion of cash. And Warren Buffett's hinted at like, yeah, we're ready to make like our next big acquisition. And I would put it more at like a Geico level, some sort of big. I don't know what's an elephant per like to Warren Buffett? Probably $75 to $100 billion.
Sure.
This was like $12 billion. This was like a drop in the bucket. But he said that he still thinks companies are like too expensive right now. But
that right there is the problem. That's the problem, because on the one hand, you have charts that look like this. It's not even the biggest. Let's go with a better example. Let's go with Nikola. You have charts that look like this. Stocks that are down like 80, 90%. And yet, what is the market cap? It's $3.7 billion for Nikola. I'm just picking on them for no reason, but like, you get the point, right? It's still worth $3.5 billion and they've produced nothing. So yes, in a sense, a lot of stocks are still expensive, even though stocks like Nikola are down like 90%.
Yeah, but what's interesting is Buffett's been wanting to make this purchase for a few years. So even if you look outside of just the public markets and you look at some private companies, I mean, if he was looking at, say, a $8 billion company 2 years ago, that company's probably worth $12 billion today. You know what I'm saying? If the companies that he's looking at, I assume he's Warren Buffett, he's looking at good companies, will continue to their valuation will continue to grow, not shrink. I would think.
Well, you mean the companies that he's looking at? Yeah,
Yeah.
probably. But
Like, so at what point does he say, all right, this thing ain't getting any cheaper, I'm gonna go ahead and have to spend?
nah, he's not a chaser.
Yeah, but I mean, he's got $150 billion waiting to make this big
So
elephant move.
what's the difference between waiting 3 years and waiting
Because I'm
5?
saying how many years left can he sit there and wait?
He will not overpay. He will not overpay a dime. He won't do it. He said that repeatedly. He won't do it.
Also, real quick, they're talking about the housing market in the chat. I wanted to talk about this too, Spencer, because I was looking at Lowe's, Home Depot, and someone in the chat that's in the industry, I think they're a carpenter or something along those lines, was telling me for home building, you don't want Lowe's or Home Depot because most of those customers are for like remodeling, not necessarily building new homes. So the question becomes, we talked about the other day, the 60 Minutes, they had this whole thing about this housing shortage.
Yeah.
Assuming we get some money flowing into new homes being built, what are some good names for stocks we can play for new homes being built? So again, Lowe's and Home Depot are more for remodeling.
We have the home builders, right? The KB Home reports earnings tomorrow.
KB Homes,
KBH, right?
KBH.
We have Lennar, LEN, right? We have Pulte, right? PHM. And then what's the other big one, guys? There's Lennar, KB, Pulte.
Oh, I bet Sherwin-Williams is kind of a play for that too, right?
No, that's more your Lowe's type thing. Here, let me show you guys this, all right? I'm going to go to Benzinga Pro.
What about Nail?
I'm going to Pro. I'm typing in Lennar, okay? I'm going to the Peers tab. I'm in the Details widget. I'm going to the Peers tab. Look at all the home builders. D.R. Horton, NVR, Pulte Group, Toll Brothers, KB Homes. Let's just sort by market cap here.
Oh, Holly's saying she's short these names because they're running into supply issues. They don't have enough materials to build new homes.
And it's not, and
so okay,
and there's the supply, and then there's the cost.
So what's going one layer deeper? Who's providing these materials to the home builders? Can we invest in those?
One layer deeper would be like
materials providers.
Materials. It could be even like commodities.
Like actually buying lumber futures or whatever.
Yeah.
But who's making I want to invest in who's like processing the lumber from raw.
Well, I mean, Lumber Liquidators, LL. I don't know.
There are none, Holly's saying.
Well, no, she's saying, yeah. Oh, yeah. She's addressing your question.
Buy appliance
manufacturers. Yeah, like Whirlpool. The problem is,
okay. Supply and demand tells us, right? Like prices for houses have gone up.
Yeah.
Demand the supply has to come up.
The demand is high and the supply is low. For houses,
right?
In theory, that should mean we should get more houses.
Correct.
But it's not working out that way.
And it's because
the home builders are still scarred from 2008 when they had all these vacant homes that they couldn't sell. They built way too many. And it's expensive to build homes now. Supply costs are going up across the board. So how does this solve itself? I don't freaking know. If I knew, I would have 4 houses. Yes, it's not even the middle class. I would say it's an entire generation. Anybody under the age of, not everybody, obviously, most people. I don't know. What's the average age of a first-time home buyer in the U.S.? Let's just spitball. 32? Is that fair? 30? Maybe? I'm 30 right now.
Wait, can you guys?
Anyone under that age is not buying a house. How can
Robert just said he's not doing any spec houses. Holly, I don't know. Do you guys are actually in the industry? Can you drop some more tidbits of what you guys see going on right now? Because Spencer and I are both.
I'm so fucked. I'm so screwed. I'm so screwed. I have been prioritizing saving for my retirement. I've like gone like all out in my retirement accounts these last 5 years or so. I have not prioritized saving for a house. And I'm totally effed here. I'm
Oh, Wreck-It Ralph saying they're seeing lots of cancellations. Holly's saying this happened in 08. I mean, Spencer, would you almost be hoping for like an 08 type housing? Because then you'd be able to afford something.
It
right?
would benefit me personally,
but not anyone else.
But it would also be, it would probably be a wash though, because rooting for, like, I can't just root for a housing market decline because that would lead to a broader contagion, right? It would take the economy with it probably. So
real estate is actually surprisingly like not that cheap in Detroit.
It's cheaper. I'll tell you guys. I spend a lot of time on Zillow, Redfin, and I like to, comparison shop houses in Michigan, houses in New Jersey where I'm from, and it's night and day. It is night and day. So
Holly's saying wait 2 years, buy foreclosures.
Yeah, I mean that's I'm gonna have to wait, and then if I'm wrong, and I end up waiting, and I end up getting a house with a higher sticker price and higher rates on top of that, well, good for me, I guess, because I got double screwed. So I don't know what the solution is here. It's tough.
Yeah, I mean, all we can do is, when we've been saying this for the past seems like year now, is kind of just wait for the supply chain issues to alleviate, as the free market will, and as we said, as demand goes up, people will, suppliers will rush in to try to meet that demand, make a quick buck.
In theory, I mean, I hope they do. We need more houses. We don't have enough houses. We need more houses. Yeah, it's scary out there. Housing market should have just bought a house in like 2015 when I could barely afford it, but should have just done it. Oh well, shoulda, woulda, coulda. It's 1 o'clock here. Mountain. That's what I'm doing. Buy a house. Oh, buy a house in cash later. Oh well. Really, what I should do is I should just buy some freaking. I should just YOLO on some crypto, right? Like buy ApeCoin or something like that, right? YOLO half my savings on that, make bank in like a week, sell it all, and then buy a house for cash. That's what I should do. Speaking of crypto, how are we looking today? Let's pull up the heat map.
Crypto.
Where's my crypto heat map? There it is. Nope, there it is. All right. Up on the screen right now, what do we see? Oh, mostly green. Okay, so Bitcoin, a day after leading us down, Bitcoin back up 4% here. I am waiting for the day when ApeCoin appears on this heat map, because this heat map is the largest coins by market cap. Don't see ApeCoin here yet. How long do you think it takes until we see ApeCoin on here? Another couple weeks?
Before ApeCoin is in the top, what is it, 15?
Sure.
Market cap?
Something like that.
No, I don't know. I think a lot of these projects have been around for a while. Let's see real quick. Check ApeCoin's market cap right now. ApeCoin's market cap, wow, is already $3 billion. Let's see where that. Oh, it's already ranked 44 on CoinMarketCap. It's pretty good.
34, and it's been out for
44.
It's been out for a week. That's pretty nice.
Top 50 already.
Pretty nice. Anyway, if you guys want some free, I would love to keep this conversation going about the housing market. Oh, Patrick Starr's got it. That's it. Obama coin. Wait. What was the coin you were gonna buy? Harry Potter or something?
Harry Potter, Obama, Sonic, Inu.
Harry Potter, Obama, Sonic, Inu.
Let's check in on
How's that coin doing? And then while he does that, I will remind you all that if you want free Bitcoin, check out Voyager, guys. Go to Voyager, create an account, use the offer code ZING when you sign up, fund your account with at least $100, make a trade, and they will send you $50 in Bitcoin just for signing up. How is Harry Potter, Sonic, Obama, Ebu, Batman coin?
It's not doing great. It's actually holding up. Relative volume is down. Take that as not a great sign. It's off my watch list. We'll just say that.
Watch this. All right. Let's bring on our next guest, Christrian Fromhertz from Tribeca Trade Group. And he joins us now on Benzinga Live. We will give him one of our special intros because he's a special guy. Christrian, how we doing?
What's going on, fellas? So
seeing some foot traffic behind you. That's bullish for New York. Bullish for reopening, right?
is there a Benzinga coin yet, or no?
Zing coin.
Yeah, we have Zing coin. It did get put on the back burner a few months ago. I think John G has more pressing things to attend to here.
Sorry about that.
Yeah, we're finding ways to use Zing coin internally. You know, offer our viewers and customers deals. You know, special event tickets, etc. There's not really. I don't think the plan is to have a dollar amount value type thing. Yeah.
Okay. Gotcha.
But yes, we do have Zing coin. Check it out. Hashtag Zing coin. How you been, man? Market's up every day. What's up with that?
There's definitely been, a shift that's been taking place, over the last week, and it looks like, what we saw last week is kind of carrying through to this week. So, and then you got to kind of on a day-to-day basis kind of deal with the rotations. Very strong move in growth stocks today. So, I like to see the little rotation from day to day, so that it's that just thin breath. We've got a little bit more areas participating, which I like that. So altogether, I think pretty good. I think it's still kind of taking things day by day, but I like the change that we've been seeing in breadth, which basically started last week. So I don't have many complaints today.
Yeah, we were talking about just the S&P's action last week. It was actually only a handful of times have we ever had the S&P finish up more than 1% for 4 consecutive days, which we saw last week. So to me, that just shows that, it's not just like one day where people are buying back in. It was sustained, bullish action throughout a 4-day period that it wasn't to me that, oh, this is just some bounce in a downtrend. This is like reversal.
Yeah, that's a great point, Aaron. I mean, I think, if it was 5 days, it would have been some type of a record or something like that.
If yesterday was, if we finished up 1% yesterday, it would have been the first time ever, 5 consecutive days, 1% higher, which of course we didn't yesterday, but hey, at least we were in that position.
Yeah, that would have scared me a little bit. If
we were setting records, yeah.
Because things are not that great, I mean, let's face it, but still good. I mean, very good, and I think, a combination of factors. We really saw a pretty ugly first couple of months. So, I think that we were due for a bounce, and we'll just kind of have to monitor and watch things closely to see if this move can continue. And we'll see how it goes with the participation. I think I've mentioned breadth a couple times. It's one of the things that I keep checking up on. We always like to talk about a Tribeca Trade Group, like whether the wind is at your back or the wind is at your face. For most of this year, the wind has basically been in your face in terms of there's been a lot more declining issues than there is advancing. But so that change started last week, where we saw for a good number of weeks, it was just basically like 1 day a week where we would see breadth that was strong. And I think last week it was like 4 out of 5 days. And yesterday was not a strong day in terms of that, which is fine. I think, as you just alluded to, that we needed probably we're due for a little bit of a breather. But if you look at the advancing and decline versus declining names again today, it's strong. So that's great. So I think for now, like, keep things simple. Make sure that just quick market message is that keep things simple. Making sure that you're taking targets and trades that you've really hit nicely on, and trade discipline. Continue to kind of either, if you didn't have a stop, make sure that you're using stops and ratchet up those trailing stops. So this way you can continue to make money with this market, but make sure that you're being just disciplined in this market too.
Yeah, and I mean, we were talking about that earlier. It's always impossible to predict the future, right? And it seems like now with everything going on, whether you're talking about inflation, the war, that it's even increasingly hard to have any idea sort of what's going to happen, whether that be in just in general or in the stock market. But with that said, Christian, do you have any like specific names you're watching right now? Anything that you currently have your eye on?
Yes, sure. There's a few names. I'm just gonna share the screen if
Of
that's
course, please
okay.
do. Please do.
All right, let me just get situated. All right, it should be sharing now, right?
Yes, sir. Go
Okay,
ahead and
so
pull it
this
up.
is
There
just
we
my
go.
my spreadsheet that I look at daily. That's kind of just what's moving and what's not. But yeah, so we got the S&P back above the 200-day moving average. So that's really a good thing to see. And I'm watching names like, just what I like to look for, especially because I really haven't been participating too much in the growth area of the market. I like to look for things like this that are getting above the 200-day moving average, right, and that are showing relative strength. So this is one name that probably is not on anybody's radar, but or not too many, but it came up in a scan last week. Came up as part of our watch list that we gave members this weekend. And this is Synopsys, which is making a move over its 200-day moving average. I also use volume at price quite a bit in what I'm doing. So this is moving above the value area for the day. So I view that as positive. And again, as long as you're, I think too many people are trying to predict, like, oh, geez, is the bottom in for this year? Are we going to really start acting much more constructive? As long as you've got a trailing, as long as you've got a firm stop price, you don't have to worry about predicting all of that, right? The price action is going to tell you whether or not you're going to be right or wrong, right? And trading, it is what it is. You're trading risk, right? So you are taking a shot. Every time you click the mouse, you are on the hook for some money. But what I try to do is just really stay disciplined. So I look for the setup and kind of go from there and hope it works. And on a day like this, there's been so many movers. I'm really kind of watching. I'm really interested to see how these names are going to close for some of the tech.
Yeah, I know earlier I was watching Nvidia because, well, I always watch Nvidia, but I
Mhm.
think they had their investor day today and it was selling off and then it started coming back. So, I mean, as long as, we keep seeing money flow back into growth, back into tech, this is a name to me that I would not mind getting in a position as it's still, it's expensive, but it's still, I mean, 330 was its highs back in November and it's only at 270 right now.
Yeah, it's definitely on my radar, and I think their event just started. They released like some kind of
Oh,
headlines
okay.
about some of the things, but I think their official event just started now. But yeah, I mean, speaking of levels, I like what this did. Yes, big green bar last week, which took out a couple of all these like previous like inside candles. So I like as long as Nvidia stays above 258, I'm really liking that as well.
Okay,
So
there we go.
so yeah,
I
so
like having a defined line like that.
yeah, I mean, because that's what it's all about to me is saying, okay, this is a name that I like. I view it as a quality name. Let me figure out where the price action is going to tell me where I'm right and tell me where I'm wrong. Because the most famous traders, investors, they don't have an 80% win ratio. They've got like a 55% win ratio. So you've got to, come to terms with that. You're not going to be right all the time in this game. And certainly, if it's something like 50-50, you've got to have a system to basically use to say, okay, this is where my trade is working, this is where it's not working, and pre-planning the trade out before you even get into it is important.
100%. Yeah, and I mean that's why it's so funny when you look into the data, like you said, 55% on some of like the biggest traders, and it's like, well, how do they not lose so much money if so many of their trades are losses? Because they know how to cut losses and
Right.
not stay in a position to where they're down 30% on it. No, they're out once they're down 5% on it, or something like real
Exactly. It's
small.
no big losers.
Yep, exactly.
Sweet green is, I was joking around as I like to do on Twitter. I just took a picture of the line inside Sweet Green, everybody waiting for their order. So this is another so I like to kind of say, okay, this store is busy. It's a newer name. It's been acting well. It actually, started to perform for a growth name, started to perform really well back in the beginning of the month. So I like this little pullback that we've seen in Sweet Green, and you're working on a bullish engulfing day, and the stock's at 36. $40 is another, $4 up, which is a virgin point of control on my chart, which was something that I'm kind of looking for. I don't have a position in this one, but I'm actually looking at it. Might be adding at the end of the day.
Yeah, that's interesting. A lot of like food or fast casual restaurant stocks have performed well relatively over the past few years, but recently, within the last few months, have gotten beaten down. Whether you're talking, Shake Shack, Dutch Bros, there's a bunch
Right.
out there now. I will say though, you're in where, New York City, correct?
I'm in New York City. Yeah.
Yeah, I wouldn't say that's I don't see too many lines here in Detroit for outside our salad place. It's mostly
No.
the Shake Shack gets more business. Yeah, I think people try to eat a little healthier in New York City, LA. But no, oftentimes though you'll see those trends in New York or in LA, and then they'll kind of go out to the rest of the country.
Sure, absolutely. Besides that, what I've also noticed too on days like this, where we've got growth performing very well, is that the other areas of the market, the ones that have been working really well this year, which has been the metals and mining, the energy, the agriculture names, those are kind of just taking a little bit of a breather. So I'm actually, as we get, closer to the end of the day, I want to be looking at some of these names that are dipping a little bit today to possibly add to some of this, which again, it's fine that they're taking, these names were really hot yesterday. So let them cool off a little bit. But I'm looking at tech resources. I would like to see it come back a little bit at the end of the day. But, I'm looking at a name that we saw call activity in yesterday. I actually just started a position into a little bit of weakness. This is Northrop Grumman. And a lot of the defense names, went big to the upside. And, I didn't want to chase up here. I actually missed this group pretty decently. You can't be in every group, but I would have liked to get a piece of either GD or RTX. But now this has kind of come back in, tested its 20-day moving average. And I like buying some of these things on dips in uptrends. So the fact that this is down today, where I'm not chasing the call activity that we saw yesterday in this, I went ahead and started a position in Northrop Grumman today.
There you go. What's the ticker on Northrop again?
That is NOC.
NOC, that's right. Let me just see. I'm just checking up the chat real quick, seeing if we've got any tickers.
Yeah, happy to go over some requests.
Flying out.
VET is another name that you probably have never heard of before, which I don't blame you because I didn't really know it until yesterday. This is a name that we saw just. I hate to use the term unusual option activity, but we did see it, a pretty decent sizable play in this energy name. So today, with the stock down 1.5%, it's not trending down. It just has a little bit of an inside day. This is not a bad day, and I know everything's growth today. So I'm actually like day trading some of these names too. I've got a day trade on in Microsoft and so forth. But just looking for swing trades, I like to be buying these names that are down a little bit rather than having to chase them because some of these names just went crazy right at the open yesterday.
Yeah. What about a name like Upstart? Upstart's had a really interesting day. Actually, opened down about 10% and is now green on the day. This came after, of course, a Wedbush
Downgrade, right?
lowered, yeah, downgraded its price target on Upstart. But I mean, that's incredible to me. You open the day down 10%, and now you're green from 110 or no 113. The stock was at this morning up to 128 right now.
Yeah, that's really what you want to see when you get downgraded, right? And you come back like that. It kind of just tells you that that finally like the sellers might be a little bit exhausted in this name. And it's just good to see, I think, just general principle. When a name gets downgraded and it fights it off like that and it's now green on the day, I think a pretty good sign. So regardless of whether you like, the analyst note or not, again, like I'll use my levels to basically say, so number one, I think it's a positive move today, but I would be watching for a move above 134, which I know is about $6 away. But I would like to see this kind of get out of the range here and start to kind of trend a little bit, and maybe take out those highs that it saw in the beginning of this month. But I like the fact that finally, I talk about this a lot where stocks are in downtrends. It's been basing here for a while. It came in here. It had a almost set a new low, but the RSI never really got oversold here, and it held in here pretty nice. So by chance, this thing is trying to kind of bottom a little bit. I need a little bit more confirmation, considering I don't really like to mess with a lot of names below the 200-day moving average. But I'm okay every once in a while trading counter trend. But I would like to see a move above 134, and then you can maybe use that 200-day moving average as your upside target. You also have
Yeah.
maybe a target that you can take at like 146, 147.
And I wonder too, with Upstart being like such a kind of growth, like risky stock, I would say, like it's almost as if it's like not even like buyers aren't even looking at the company or like the underlying asset. It's just like, is growth and like risk on assets going to come back into favor? If so, I like this name. If not, then it's like in the past month or whatever, when we've seen growth be out of favor and investors go into more value names, whether they be in energy or just your Walmarts and Procter Gambles of the world, instead of your Upstarts and Rokus, it's saying like, oh, I don't really care about what this company is or what it does. If growth is coming back in favor, this stock's going to go up.
Yeah, I mean, I think there's definitely like a beta move to that too. But I think it's got something that's a little bit different, and I just like the fact that it really and this got helped by earnings, but just the fact that it kind of held its low here, I think it's telling you something. But it may need a little bit more time. I still don't, I don't like to make predictions, but I just think in this environment where you're going to have, whether or not it's 50 basis points or a quarter of a point next Fed meeting, the growth names I think are going to be names where you've got green days. You do want to be taking some targets, because I do think it's going to be a more difficult environment, this year. We're also seeing higher interest rates, which makes these things more expensive. Names like an Upstart more expensive. So again, like I want to see more participation out of this group, so it's not just value. But I think that you kind of have to, pair these appropriately and size your position so that you're not really hugely overweight growth in a rising rate environment. So that's my take for now. I definitely make adjustments based on what I see in the charts, but I think 134 is a good level to watch in Upstart.
There you go. Yeah, and Upstart too. I mean, it's as honestly like I just like keeping tabs on it because it's a fun stock to trade. It makes moves like this all the time where it'll be
Yeah, it's
down
fast.
8%, then finish green, And so yeah, if you and a lot of times, I don't know if you've found this, Christian, but a lot of times if you trade, I've found that if I trade like the same stock like over and over, I'll get a better feel for it. So to me, like I might feel more comfortable trading Upstart, which I've traded a lot, versus trading a stock that I've never traded before.
Oh, definitely, and especially when you have a day where you kind of realize, you may have realized early on that it's going to be more of a growth momentum day. You definitely want to have the names that move a bit faster. Now, again, this was a little bit difficult because it wasn't doing what like some of the cyber names were doing, right out of the bat today because of the downgrade. But as we discussed, this was a nice buy the dip today on that. On that downgrade. But absolutely, it's important to have when you know what kind of day it's going to be, whether it's growth, value, or something in between, just to have your go-to names that you could say, okay, this might be an Upstart day, or this might be, a Datadog day, or something in terms of, when you hear cyber headlines, those were, right on the top of our list for this morning going into the open, that you might see momentum in that group of stocks today.
Yeah, no, definitely. And honestly, talking about that, you just want the growth day. To me, my stock that I've like been checking recently for seeing if growth is well, I always like checking ARK, ARKK, obviously, but then like
Hmm.
Roku, which is one of ARK's biggest holdings. If I see Roku's up like 5% on the day, I'm just going to assume that that whole growth tech basket ARK stocks are up, and then same thing if Roku's down. So until that be like there will become a day, Christian, where like Roku's down on news or something and all other growth stocks are up, and I'll be like, all right, now it's not my metric anymore, but for right now it is.
Yeah, absolutely. That's a great one to look. I mean, anything high beta, right? Anything that's a growth name that just moves very fast. It's good to have a couple of those names up on your watch list, and it'll give you a little bit of a proxy for um, what type of day it might be in terms of performers and participation for the day.
Yep. Let's see. I'm trying to think if we have any other.
Yeah. Any other areas that you guys? I'm watching. Like I said, I'm watching the cyberspace. I
What are
CrowdStrike.
your what are your favorite names in that? Is Crowd like Fortnite, CrowdStrike?
Don't say Okta, please.
Not Okta. I like Datadog a lot. Datadog
Okay.
had good earnings. I've been just kind of being patient with it. I traded it. Not I actually traded Zscaler today, but I was looking at Datadog. So I'm looking for Datadog to basically stay above like 150. Right? If we could close above 150, or if it gets there tomorrow, doesn't matter. You're above all the moving averages, and right. So again, 200-day moving average is important for these growth stocks, in my opinion. You also get into the March value area, which again I'm using volume at price, right? So you've got a couple things going on here that gets me a little bit more comfortable to kind of get into a name, just knowing that I've got it like a nice firm level to trade against. But I like the Datadog. Zscaler, I've got my eye on, but I think it's still, maybe it's just a little bit too high valuation. Um, Palo Alto's having a big day today, although it's off the highs. That's really been your leader in this group.
I've heard that a few times the past couple weeks. Palo Alto having a strong day.
Yeah, and it's still an expensive, again, looking at overall valuation and growth names, it's still an expensive name, but it's not as expensive as a Zscaler. FTNT is another one that's kind of sneaky. It's a high price stock, so it's a little bit harder to trade. But I like the pattern that's going on here in FTNT. But again, it's a little bit. I think it needs to kind of firmly establish this trend a little bit more. The last time it got up here, it got hit pretty hard on one day, which I don't like to see a move like this on no news. But that's when growth was having a bad day. But this is a name I think to kind of keep up on your radar. And then also, if you like the whole group, don't be afraid to trade the whole group via the cyber ETF, because believe it or not, of all the
CIBR, long and strong.
because out of all the charts that we went through, the cyber ETF actually looks pretty decent in here. It's kind of making some type of W pattern, maybe an abstract W pattern that's going on here, right? But it made a higher low here off of this, and it's off of it's above where it was in the beginning of the month, the 3-3 high, right? So I think it's really got something going on here. So I actually, and again, you get rid of your single stock risk as well when you go into a sector ETF. But it moves fast enough. It's up 3% for the day. So I like this
Nice.
play on rather than trying to pick the one that's going to move. And it's also $52 too, which is a little bit easier than trading a Palo Alto or an FTNT, which are really high price stocks.
Yeah, Fortinet was my favorite in the space for a while. I mean, from if you look at the long-term chart from
Absolutely.
like October 2020 to a year later, I mean, that chart for a full year was just like the strongest stock in the market. It just all it did was go up. And then now, once we got up here above like 320 or so, we've kind of just been trading in this range for the last really 6 months or so, like the better part of a year.
Yeah, and you see that sometimes with stocks that were just in these really nice trends. Sometimes they do spend quite a bit of time going sideways, after a big run, and then it's important just to kind of, if you're in them, that's fine, you could stay in them. But if you're not, just you want to monitor for when it's out of the consolidation and resuming its uptrend.
Yeah, it reminds me of we saw that with like all the biggest tech names, Apple, Amazon, after the big COVID run up. Starting in, and I'm looking at a long-term chart of Apple right here, starting in like fall of 2020, we had a little sell-off, and there was a while where we were just kind of trading sideways on Apple, and it was like, what the hell? This is Apple. Why is it not going up? This is the strongest company in the world, and it was just trading sideways for like 6 months, and then all of a sudden, oh, yeah, it remembered it's Apple again, and then started going up again.
Yeah, I mean, this is another one too that it's not like, if you take a step back and you realize that a lot of stocks, they probably got a little bit too far ahead of themselves, over the last year or two. So it's not bad to see a name go sideways a little bit, kind of test the lower boundaries and so forth. But I like Apple. I've got a position in it in my trend portfolio. I almost had a bail on it if it really kind of stayed below the 200-day moving average, but that was a nice test for it, and it spent 1 day below the 200-day moving average, and then right back above, which is kind of what you want to see. You want to see when a name is going to test. You don't want to see it spend a lot of time below the 200-day moving average. So I like the fact of what it's doing. You could probably draw a happy little trend line in here, right, to basically see that. It is working to kind of get back into its nice uptrend here. So
yeah, and I could be wrong, but I think we had a cross on the moving average on the S&P 500 too. Like I remember specifically like a week and a half ago, whatever, people were tweeting about death cross on the SPY, all this, and like everyone was so bearish. And then literally the next day was like the day the S&P 500 was up like 2%, and then we went on that 4-day stretch where we were up 1% every day. So it was like, oh, it looks like the moving average got back in line or whatever. I don't know exactly what happened on the S&P, but it was funny.
Well, I know Spencer loves his death crosses.
Oh yeah, love him. Christian Fromhertz, his Twitter handle is on the screen at Steve Fromhertz. Tribeca Trade Group URL link on the screen and in the description. Christian, it is always a pleasure. Thank you. Good luck. Rest of the day, rest of the week.
Thanks so much, guys. Have a great day.
The next time we talk to you, the market will be different.
Green.
Different. I'm just say different. It'll be different.
I like that.
I don't know.
It'll be different, or maybe it won't be. I don't know. How's it going, Christian?
See you guys. Take care.
All right, guys. I know why you all are here. You all are here for the Draganfly CEO. I am still waiting on Cameron.
I thought it was for me. No,
we're not waiting for you.
No, I'm saying I thought all those people came in for me.
No, why would they do that?
I don't know. I thought Shelly got the word out there.
No, why would anyone?
I don't know.
No,
I don't know.
No, if anything, they'd be here for me.
I know, but I thought maybe Shelly was like, "Oh, you guys should check."
We have sent, our team has sent a note to Draganfly. When Cameron joins, we will bring him on the show just like that. So
I think
I know no more than you. I'm just here live.
Yeah, all our cards are out on the table now. We
Cards
went face up on the cards.
Cards are on the table.
Our cards are on the table.
I see Neil Hamilton in
Neil
the office.
Hamilton.
Cards are on the table. When Draganfly is here, we will we're not going to keep them locked up backstage. That would make no sense. So when they're here, you'll see them, and that'll be that. In the meantime,
Smash the like.
smash the like, and let's look at that chart here.
All right.
Let's look at that. Look at that chart. Oh boy. Okay, so
I was gonna ask. So when we were just talking about the death cross thing,
whoa, what just happened?
maybe that's when you said that the CEO's missing.
Oh shit. No, that was 15. Wait. Oh shit. Wait, don't tell me I did that. Come on, guys.
You were just talking about how you hate.
I didn't say I hated anything.
Yeah.
I said he's not here
Now
yet.
he's definitely not gonna come on. Look what you did.
I didn't do anything.
Oh my God, Spencer. All right, say something nice. Say something nice about. Oh,
What do you want me to say? He's not here yet. Give the guy a second, people.
Yeah.
Yo,
This could be a buying opportunity.
dude, guys.
Should
we? Oh my gosh. The market is dumb. Sometimes it really is. There goes my mortgage.
Spencer.
Yo,
Spencer.
when he's here, he's here.
All right,
That's
so-
all I can control.
All right. Well, before you decided,
I can't control anything other
before
than
you
that.
decided to do this, Spencer, I was gonna ask. So we were just talking about the death cross, which is essentially when when the stock drops below the 200-day moving average, correct?
No, it's when the 200-day crosses below the 50-day.
Okay.
Yeah.
So it's showing that the more recent price action is becoming like more bearish than the overall 200-day moving
Right.
average trend.
Right.
So what I was
Oh wait, is it the 50 below 200?
yeah, no, I think you're right. I think it's the
No,
200
200 below 50.
Yeah.
Okay.
So, when Christian brought that up, I was alluding to, seeing on Twitter a couple days ago, everyone talking about, oh, the S&P 500 death cross, whatever. And someone like tweeted something that was like very bearish, and they were like, first death cross we're seeing on the S&P 500 since like March something 2020. And I wanted to kind of like snarky reply to it and be like, oh, so that means the markets must have like gone down a lot after that happened the last time, right? Because
Yeah.
like that's what he was
Yeah.
insinuating in his tweet. But really, obviously, we know the opposite is true, that after that happened in March of 20, obviously different times, unprecedented times, as a lot of people said that at that time during COVID. But yeah, I don't know. Basically, my point was, I don't think like the death cross is something that like I see and I'm like, oh my God, like gotta sell everything. And that was
Hey,
actually
look,
a very
man, it's all subjective. All right. Whatever indicator you want to use it. And on that note, no more talking about death crosses, because drum roll, please. Oh crap, where's my drum roll? Sound effect. There it is. I promised y'all. When he's here, he's here. I'll bring him on, and he's here right now. Let's bring on, if we can, the CEO of Draganfly, Cameron Chell. Let's give him one of our extra special intros. Cameron, welcome to the show. Thanks for coming on today.
Kidding me? Thanks for having me.
All right, nice background. I dig it. Okay, so let's get to the news of the day. We've got an order. We're sending drones to Ukraine. Tell us more.
Yeah. So Draganfly, we've got a history of building innovative drones, oldest commercial drone manufacturer in the world. And we developed a drone that is actually a medical payload delivery drone. So the actual drone itself can carry things like blood, medicines, insulins, pharmaceuticals. It's extremely fast. It's extremely sturdy. It can fly beyond visual line of sight. And the design here is to be able to get medical equipment into people that are either in siege situations or across battle lines or trapped in certain situations where you can't walk somebody across the street necessarily or drive a truck into an area. And so Ukraine soldiers reached out to us, Revive Soldier Ukraine, which is a relief agency, and asked for these drones specifically because they could do this type of medical relief. And it's the only type of temperature control box out there that does it. They also really like the fact that we've done a lot of military contracting work before, so we know how to build these types of drones. And then the other issue is, they shared with us some incredible video of, Chinese drones that they were using to do search and rescue being targeted. which is really quite extraordinary. So they've had to abandon all of their consumer bought Chinese drones and go to a US made professional grade drone like Draganfly, and they've selected us, and so we can't get them over there fast enough now. We're hoping we're going to get hundreds and hundreds of them into theater as quick as possible.
So what's the initial order size? The PR said up to 200, right?
Yeah. So we're shipping 10 right away, and then there's and then we're producing another 200, which will get shipped out by August. There's some import export stuff that we've got to work through. So we've got to call it conditional at that point. But we really do feel that once the effectiveness of these drones are shown in theater, that we could be sitting on potential of orders for thousands of them. One of the questions I get is, well, what if it gets shot out of the sky?
Yeah.
Like, well, your alternative is trying to run somebody across a street or around a corner or into a building you don't know, with medical supplies or food or whatever. And what if they get shot? Like, if the drone gets shot, who cares? Send another drone. And they're like, well, what if that drone gets shot? Send 10 more drones. I mean, these are kind of $20,000 units. The ordnance that are being shot are 4, 5, 6, 7, 10 times more expensive than the equipment is to come in and save the people. So cost isn't a factor here when you're talking about this type of theater. So we really see the potential for thousands of these getting to work.
That was my next question, was how much these things cost to make?
Yeah. So there's two types. There's a medical response drone, which brings in 35 pounds of temperature controlled supplies. And then there's also a search and rescue drone, which has a thermal camera and also has our vital intelligence technology on it, which allows our cameras to actually read vital signs in search and rescue scenarios. So the medical response drone is about a $35,000 unit, and the search and rescue drone is about a $15,000 to $20,000 unit.
Okay. And who exactly are these orders from? They're from Ukraine, or they're going to Ukraine, but who are they from?
Yeah, so specifically, they're from one of our channel partners, which is called Cold Chain Technology Services. So Cold Chain is an Austin, San Antonio-based logistics company. They've done DoD and NATO work for the last 15 plus years. They were, as an example, the largest logistics manager of vaccines for the entire state of Chicago or Texas. They provided all the COVID vaccines for the city of Chicago and such. And so that's our partner who this order has come through. And so they've got the know-how and the expertise to be able to get this product actually over into theater. It was Revive Soldier Ukraine that had approached them on the particular type of drone that they were looking for, of which the drone that we manufacture fit the bill.
Have we disclosed how much these contracts are for?
We have not disclosed how much these contracts are for. Yeah, they're open, and somebody can do the math pretty quick on it. But we don't know exactly how much they're going to be for, because, like I say, there's going to be attrition of some of these things, and I think there's just going to be such great use cases that more will be coming on order, in my opinion.
What's the expectation there as far as future orders? Like on a scale of 1 to 10, in terms of confidence, how confident are you that more orders are coming?
I'm a 10 out of 10 that more orders are coming. Okay. And I just know that because the medical response, disaster relief industry, and the ability to deliver medical supplies, whether it's in combat situations or disaster relief situations, the ROI on it to put a $15,000 or a $20,000 drone to use, as opposed to risk, boots or trucks on the ground, getting that equipment there, getting it there slower, et cetera, is just so prevalent that, we've been working with these drones in the state of Texas for the last year with EMS services. We've got over 300 flights on them. And so we've got interest from all over the world. And this is really just the first use case now that's popped up where it's just ideal.
So Cameron, you've outlined kind of this use case for the drones over in Ukraine. Are there other use cases outside of in times of conflict, war times, where you expect to see Draganfly drones used?
Yeah, great question, and thanks for asking that. As it relates to this specific model that we built, the answer is yes. We do plan on deploying with EMS in Texas over the coming 18 months. There's a mandate in Texas that EMS has to be within 7 minutes of any person or any population. And so putting drone capability into those locations allows things for like blood or medicine or insulin or EpiPens or anything to get to locations very, very quickly. Ooh. We're also very active in our Drone as First Responders program. And so what this is the first thing that will be happening that you'll start to see over the coming years, very short, while they're being deployed now, is the first thing that happens on a 911 call is a drone is deployed. Because that drone can get there anywhere from 10 to 15 minutes on average quicker than a truck or a car can get there, and can give visual reference and assessment while the trucks are coming. So about 30% of all calls that are responded to first by a drone or concurrently with the drone basically are repurposed by the time the trucks get there. They're either turned around or there's different resources. They realize it's violent. It might be a domestic. The fire's larger than they thought. So they've got visual eyes on site almost immediately. And so this is called a drone first responder. And we see a very robust market for that shaping up over the course of the next 18 months as well.
What kind of guidance can you give, Cameron, as far as future orders are concerned?
Draganfly, still is, even though we're the oldest commercial manufacturer in North America, we're still really quite a small company. The reason being is that the commercial drone market has been a very small drone market. Really, the drone market has either been military or it's been consumer. But now that the FAA is giving clearer and more clear guidance on a almost quarterly basis now for beyond visual line of sight, in particular, and flights over populations, we're seeing more and more commercial use cases come up. So the basic best research that I've seen that I actually believe is that the potential market size by 2028 is $40 billion. It's a $20 billion market right now. That's almost all military. So we've got about $20 billion of growth over the next 5 years, which supply will not meet that demand. Draganfly itself, we've doubled our revenues year over year for the last 3 years. And while we can't give guidance, we do on the 29th have our earnings report coming up. And we're going to show that similar type of growth. And based on the pipeline that we've got in hand right now, well, in fact, just based on one order we announced in November of last year, we have one order that starts in 2023 here for us, or at the end of 2022, that's twice the size of all of our revenue last year. So we're going to continue to see this type of, doubling in year over year growth, for the top 3 or 4 drone companies in the industry.
What about your production and your manufacturing capabilities? Because everyone under the sun is having production and manufacturing and shipping problems right now.
Yeah. And we're not immune to that at all. The fact of the matter is our volumes up until this point really haven't been so significant that it's hurt us that much. We also are, from a revenue standpoint, we do a lot of services and we do a lot of software and we do a lot of AI and data services. So we have a hedge against, just our complete, hardware package. Really, at the end of the day, we love the hardware. It's so cool and everything. But the reality is it's all going to be given away for free. And our model will continue to move down that path of looking to work and own customer relationships based on the service that we give them, which is, incredible data that they can't get anywhere else, incredible delivery of and engineering that they can't get anywhere else. And the hardware is just a function of that. But we don't see anything significant over the course of the next year that's really going to interrupt our supply chain lines. It might affect us, 10 or 15%, but when you're growing 100%-ish year over year, that's a rounding error.
All right, Cameron Chell, the CEO of Draganfly. You guys know the ticker DPRO. Cameron, thank you for joining us today on Benzinga Live.
Yeah, you guys are awesome. Thanks so much.
All right.
Thanks, Cameron. Have a great rest of your day.
One thing I wanted to add with regards to these types of stocks is those of you who expect, first off, we know that the market is not a rational place. Every day we see this happen every single day. That can be especially true for these smaller cap companies, right? Irrational moves in both directions. Okay. You have to know that that's par for the course, right? I just saw I think I know why the stock was trading down into that interview. And it was not me per se. I think a certain person on Twitter who has beef with Benzinga and
we're chill.
Decently large following. He shits on us a lot. And
I don't know. I've talked to him before.
Whatever. I've talked to him too. I've met him before.
Yeah.
Yeah. But-
Has had
but-
a past of
Yeah, I know. What so he tweets that, the CEO's not coming on, and like there he is. So just if you expect us to be able to A, explain why a stock is moving to you, and B, if you expect a CEO to come on our show and for the stock to go higher because of that, I think you are mistaken. That is not the point of this. It is not.
Well, we're impartial. We're just here to ask questions.
Well, let's get that on the table. Neither of us own this stock. Okay, let's be absolutely clear about that.
I'm just here to ask questions.
We invite Cameron on the show because this is the here. How high is this today on the most searched tickers? This is the number one most searched ticker on Benzinga Pro today. Actually, now it's number 2. Tesla just finally, because Tesla every single day with that stock. So now it's number 2 as the most searched ticker on our platform on Benzinga Pro. Okay, so there is interest there. That's why we have him on. So, know that going in here, we are not going to pump or dump your stock. That's just not going to happen. Okay. That's just not. I hope you guys enjoyed that. It's pretty wild stuff. I mean, this is a pretty wild move. Jeez. Listen, that's what makes a market. That's what makes a market. Out of curiosity,
James Stewart. Wait, my display picture.
32 million shares outstanding, so a pretty small float. That's part of it. Small company, they can make crazy moves like this. That's par for the course. Know that going in. If you don't know that going in, then what are you doing? We asked him, Anis. I highly doubt. Well, actually, we know that he's not going to give us specific guidance. We asked him about upcoming deals. They're not going to name specific deals that are coming down the pipeline.
I don't understand why some like super small companies are even public in the first place. Like just funding purposes.
Yeah, it's a great way to raise money.
Really?
So wait, Richie. What I think happened is, I think there was a certain person on Twitter that tweeted about. His tweet though only has it has no likes. It has 6 likes. So maybe that wasn't it. So never mind. I don't know why that happened. I really don't. I'll be honest with you guys. I really don't. But no, going public is a great way to raise money, and then you can do it repeatedly.
The show.
What? I mean, like, as a company, right? Like that's why people do it. That's why you IPO.
Right.
Is to raise money.
I know. I feel like some companies would be better off like delaying their IPO process till when they're a little bit more established or bigger.
Maybe.
Who knows? I'm not even saying that for DPRO. I'm just saying more in general. Like I look at some stocks that are like I don't trade like any stocks under $5.
Yeah, me neither. And I'll show you guys in my so this is my Benzinga Pro, and this is my movers tool that I use every single day. On the left hand, I got gainers on the top, losers on the bottom, and this is just for pre-market, so it stops updating at 9:30. But I'll show you guys. I filter out low price stocks. I filter out all stocks that are below $5. And actually, I should even have this filter on too, because every day there's going to be crazy moves like this, right? And that's not. I know that, right? I'm not here for the crazy moves. I want to know what the overall market is doing, not if some stock is up 100%. It happens every day. So it is a wild place. I'm not sure what that means, Electro. They're not. The company can certainly dilute. They can do an offering. Maybe we should have asked about that shit. Sorry, guys. If they do an offering, they're going to announce it. And you have to know that. You have to know that they can do that. It's not necessarily like think about it if you were them, right? If you're a Draganfly, what do you do in this scenario? Your stock is up a ridiculous amount. You raise money at the higher price. And yes, it's at the expense of shareholders. That's the game, right? That's this game that we're in. Yeah, I know Ashton Vest, and I don't understand that because, as you clearly saw, Cameron was here. So maybe because he was 5 minutes late. I don't know. I'm a little bit pissed off at that tweet right now, honestly.
All right, guys, we only got about 9 minutes left. So if anyone's got any stocks they want us to check out or has any questions, drop them in the chat.
If you have any stocks you want us to short for you, we don't do that. I mean, Aaron and I don't do that. So, yeah, James. I mean, you got to know what you're buying, right? Like that's part of the game in small cap, micro cap land. You got to know that, right? Companies that have market cap of 50, 100, 150 million dollars, they can go under. Many do. That's what happens. Or they can get acquired. That can also happen. So I'm not shorting the NASDAQ, actually. Why would I do that? Now? Rob says we're unprofessional. Did you hear that?
Rob who?
I don't know. Rob says we're unprofessional. Do I look professional? I'm wearing a hoodie.
I'm wearing a collared shirt. I look pretty
Right, he's wearing a
professional
collar.
today.
Good for you, man.
I'm a suit. No, Rob.
You're so professional, Aaron.
Rob, what are you? Rob, it's 1:53 p.m. on
It's the internet.
Tuesday.
It's the internet, man.
It's 1:53 on a Tuesday. You should be working right now, not on YouTube.
Can I just give a shout out right now to my very good friend?
To Rob?
No, not to Rob. My very good friend and college roommate, Scott Kornberg, is
Watching the show right now?
No, he's not. He's not watching this show. I promise you. He is right now broadcasting his very first Major League Baseball spring training game for the Miami Marlins. If you tune on the Marlins game right now online, that's my friend, Scott Kornberg, on the radio call. Shout out, Scott.
Radio.
Well, yeah, it's spring training.
Okay.
Yeah. That's,
So
that's my guy.
He has a deal with the Ray. You said Rays, Tampa Bay Rays?
The Marlins.
Marlins. So he's going to be in Miami doing radio for them this year?
He works for their AAA team.
Oh, so okay.
Yeah.
Cool.
Yeah.
Cool. That's awesome.
Dude, should we wear suits tomorrow, Aaron?
No.
No? All right. Yeah, I don't want to.
I don't want to see it.
Why would I wear a suit? I don't want to wear a suit.
I don't know.
I actually tried on all my suits over the weekend because I have a wedding in a couple months, and I wanted to get ahead of that, make sure they still fit me.
Let me check under my Robin Hood, see what's moving. Oh,
what?
boy, that's not good. Nvidia. What's going on with the Nvidia thing? Someone in the chat.
Oh yeah, they're investor days today, right? I saw a headline that Nvidia sees like a $1 trillion market, total market size, something like that. Which was pretty funny because once you start talking about numbers that big, you lose all frame of reference.
Yeah,
okay.
G-Gelt, I've been over this a million times. I don't use Robinhood as my primary broker. I use it as my
YOLO broker.
Yeah, I YOLO some options in here. So it's just for fun, and it's the easiest for me to share if I'm making a live trade or something. I can share my Robinhood account without having to worry about sharing any other personal details, etc. Oh, Holly, are you in Upstart right now?
Yo, Upstart. Look at Upstart from the open here. Let's pull up this chart.
You weren't on. I was talking about Christian with it.
I know.
Down 10%.
I know.
Oh,
so this is a downgrade. Downgrade. Nope. In your face.
Yeah.
Yep.
And this is where I was saying, I think part of it is people just saying they don't care about the underlying stock or the analyst ratings for that stock. They're saying basically, oh, hey, growth is coming back in favor. Investors are willing to take on more risk now. So I'm going to go buy Upstart. It doesn't matter what it is or what they do, whether it's Upstart, Roku, any of these names that have gotten so beaten down.
Yeah.
It's just that they're risk off, they're risk on versus risk off.
Okay, I have a couple of things I want to plug real fast. Remember yesterday we did the stock market madness?
Yeah, is it working?
It's working.
Oh, wow.
I'll put that link in the chat. But we have another. We love brackets. It's March and we love brackets here at Benzinga. So here's the link to our bracket, our stock market bracket. We're doing another bracket. Can you guess what it is?
NFTs.
How'd you know? You're so smart, Aaron.
I don't know.
An NFT bracket. That's what they're going to be doing on the next show coming up next. The roadmap is our NFT show. I'm dropping the link in the chat. It's benzinga.com/NFT-bracket. This is what the page looks like. Aaron and I are not going to fill it out because Chris and Brian are going to fill this out on the next show coming up in 4 minutes. So benzinga.com/NFT-bracket. Pick the winner and get some prize of to be determined value. I think. I don't know. Check it out. Link in chat. There it is. Plus, I don't know enough about NFTs to vote on this. All right. We are done here on this show. If you guys are new here, welcome. We are the most professional, unprofessional show on the internet. So check us out. We're live every day, 11:30 to 2 p.m. Eastern time.
All the biggest news we'll cover in the stock market, financial space, really anything. But any.
Oh wait, I just got a hot tip
hot tip
from Money Mitch.
What Money Mitch said?
He said Lucid. Oh shoot! Look at Lucid.
He said buy Lucid.
He didn't say buy it. He said look at Lucid.
What did it be doing?
It's mooning. What the hell's going on with Lucid?
Lucid.
Do we have a headline here?
Oh, Nvidia is.
Oh wait, no, that was an hour ago.
I saw something about Nvidia and Lucid.
If that's what it is, they're talking about it.
All right. Well, I don't want to give any fake news, so I don't know anything about it. Anything.
We don't know nothing about nothing. All right.
Andrew in the chat saying partnership with Lucid. So.
There we go.
Oh, and Boyd BYD. This is
shit.
BYDDF is. See, whenever you say BYDDF, the ticker, it kind of sounds like you're saying buy the dip, buy BTFD, BYDDF.
Okay.
Not really, kind of.
Not really.
But all right.
All right.
That's a stretch.
Smash that like button, please, and thank you. Please remember that all the information from our show is meant to be used as information.
Can and will be used against you in the court of law.
Yes. Thank you to our guest today. Thanks to Cameron. Thanks to Christrian. Thanks to
Rob in the chat.
Thanks to Rob in the chat. Thanks to Toby. Guys, if you missed our conversation with Toby Deml, the director of Gaming Wall Street, that new documentary on HBO, rewind this stream like an hour and a half because we had a great talk about GameStop, and it was a really and about short selling and the market and is it rigged or is it not? And it was a really great conversation. I enjoyed that very much. That was about an hour and a half ago on this stream. That's it. We're done. The roadmap with Chris and Brian.
And we won't be live tomorrow.
Oh, shoot. Thank you. We're not going to be live tomorrow on this show. We will be live, but not here because tomorrow is our latest Benzinga boot camp. We've been doing these on the weekends. We're deciding to switch it up. We're going to do it during the week tomorrow. See what happens. So tomorrow, 9 a.m. to 3-ish p.m. Basically, right after pre-market prep, we're doing Benzinga boot camp all day tomorrow. So no live trading, no Benzinga live, no roadmap, maybe no at the close. Benzinga boot camp. That's tomorrow, though.
Wait, Holly, are you saying buy the ticker YOU earnings tomorrow? You don't need to sell me anymore. I'll do that. All right, cool.
What the hell is he? Clear Secure?
I've never heard of this.
Wait, isn't that the?
Oh, Clear like at the airports?
That's what I was gonna say.
They have earnings tomorrow.
Do they? Oh shoot, I didn't know that. Wait. What does Benzinga Pro say? Yeah, tomorrow morning. You gonna yell us some U calls?
Holly said buy it.
Dude, if Holly said it, it must be true. We got to go, though. We got to go. See you guys. Aaron's gonna YOLO on some U calls.
We'll be back on Thursday. We'll be talking some biotech with Vivi. We'll be doing our normal Thursday show. Maybe we'll get Hot Stocks Luke on. Maybe Car Parts CEO, new CEO, potentially.
Maybe?
Maybe.
Don't tease me like that, man.
But all right, guys, smash the like if you haven't already. Subscribe if you haven't already. Love you guys. We'll be back on Thursday. And make sure to check out Boot Camp tomorrow.